Well, good afternoon, everybody. I am your host for today. This is Sherry. I want to welcome you to the December 7th Traders Exclusive Live Strategy Series. We invited 4 expert traders to speak here today at our free event, and I'll just pique your interest with 4 points that will be covered. Find out the one thing that will keep you in the zone so that you can be part of the 10% that trade profitably. That's our first speaker, Norman Hallett, and he's waiting now. Finally, understand consistency is key and generally is nothing what new traders think it is. And that's Paul, who's up second. We're going to discover, among other things, breaking out of areas, prime trade setups, learn how to read them and monetize them with Marina. She's third. And then our final guest today is going to be Ron, and he's going to show us, among other things, stop guessing at which stocks might go higher or lower in the coming weeks. So I want to thank you for coming in. Please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques, all free. There's a free ebook on there too. This is also where you're going to find today's recording. It'll be at tradersexclusive.com/archived, past tense, _webinars. Look for an update to the website this year. I'm so excited. Before we get started, of course, I have to share the quick disclaimer. You know it. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. Please do ask your questions as they're happening. I'll see the timestamp. That'll give me some context for what you were asking when. And but each presenter is going to wait until the end of their presentation to take questions, unless of course they tell me in advance that they like to do it on the fly. So with that being said, can anybody please just talk in your chat and say, yes, I can hear you. Yes, it's coming through. Somebody. I'm not seeing anything, so I'm worried that I'm either not. Okay, cool. Bob, June, Jack, thank you. All right, we're going to get going now. I want to introduce to you Norman Hallett of the Disciplined Trader. It's also, and Norman, you're going to explain to us, are we adding a new business or are you changing the name of the business? I'm going to unmute you.
That's an excellent question. Actually, Subconscious Training Corporation started in 2000, and at that time we produced 8 or 9 different softwares for mental training for golfers. It's still being used by pro golfers. Salesman software still being, I get a check every month from the distributor there. So at one time we did a lot of things for a lot of people, but about 12 years ago, we decided we're going to zoom in on my love and our love, and that's trading. So we now work exclusively under the Disciplined Trader.
Awesome, awesome, awesome. So you're going to talk to us today about the untold secret to trading, quote unquote, in the zone. And let me just do your bio that you gave me, and then I'm going to hand it over to you. Norman Hallett has been a trader and trading educator for over 4 decades. From 1981 to 1988, he ran one of the largest options firms in the country and later worked as a commodity specialist for Payne Weber. In 1991, he formed the Hallett Group, managing large trading accounts for individual investors as a commodity trading advisor. And he currently owns and operates the Disciplined Trader and, of course, Subconscious Training Corp. It was founded in 2000, where he focuses on helping traders with the too often neglected art of mental and emotional control. And he is responsible for the building of simple trading plans, which is trademarked. Mr. Hallett is a popular speaker at trading expos and countless international venues. He has over 1 million views on his 4-minute drills for traders, which is found on YouTube, where he gives tips and techniques for being a more successful trader. Thank you for joining us today, and I will make you the presenter, and you will take it away.
All right. Consider yourself taken. I
All
should have said
right.
with Liam Neeson, he's got those movies out about taken, which I like. I love
Yeah,
this.
I love them. Yeah.
Thank you, Sherry. I appreciate the opportunity to lead off. You know, you mentioned that I've spoken at a lot of the trading expos, and they always put me on first. You put me on first too, and the reason they put me on first there is that I'm running around the stage. I try to kind of lift up traders who are, you know, you can be so dead serious about trading. Look, it's a serious thing, but only
Life's
trading in
too
the
short,
zone.
right?
Well, yeah.
Life's too short to be too serious all the time.
Right. Life's too short to have sorrow. You could be here today and gone tomorrow. That's from a song. Tell it like it is. Tell it like it is. Okay. Well, thank you again, Sherry. I want to we're going to, I'm going to cut this to about 40 minutes because I want to give the next speaker all the time that they need. So I'm going to whip through this, but I don't want you to confuse the speed of my presentation with any kind of lack of importance, because I think if you had a sheet of paper in front of you, you know, when we were teaching sales and sales training, when it came to the mental and emotional, one of the things that we always heard about was something called the Ben Franklin measure, or the Ben Franklin close, where you put a line down the middle of the paper, and on the left you have one thing, and on the right you have another. In this particular case, on the left-hand side, I would have you put how much money and attention and time you've spent on your trading plan and having the perfect trading plan for you. And then on the right-hand column, I want you to put how much time, effort, and money you've spent on the mental and emotional part of trading. Now, I usually ask the question first, how important is mental and emotional control to your trading? And when I do that in front of a crowd, they yell out every time, 90%, 99%, crazy numbers. You'll get a couple at 50%, but nobody less. And yet, I think if you took a look at that piece of paper that you took a look at, that I asked you to draw in your mind in this case, I think you'd see you've spent a lot of money and a lot of time on your trading plan, and likely very little money or time and investment on the at least equal part, some, as I mentioned, 90%, 95% important, on the mental and emotional capability. I mean, look, what good is a trading plan if you don't have the mental and emotional capacity you have the capacity. If you can't exercise your capacity to follow the trading plan and not trade in the zone. Trading in the zone is I'm going to define it. Let's get going on the presentation. But before I do, that's my wife, Tisha, who is really the heartbeat of the firm. Tisha is responsible for all of the mental and emotional content that we have when we train traders, whether it's in our high-end one-on-one training, or something in the middle, which will be starting the beginning of next year in January. So watch for that. For our Excel program, which is a 28-day transformation program. And then we have our flagship Discipline Trader Mastery program. Those three programs have all kinds of content. I supply all the trading content from the standpoint of applying a lot of what we do to actual trading. And Tisha is responsible for all the subconscious trainings and what we call the EFT, Emotional Freedom Technique work that we do with traders, that transforms the way you think and works with the subconscious mind, which is really the only way that you're going to be able to transform from out of control to in control. I'm going to show you how that's done. I've been around. I'm going to just brief through this. I'm just going to press some buttons. Actually, that last thing right there is me talking at the 4-minute drill for traders, and Sherry was nice enough to mention that it has over 1 million views. I believe it's now over 2 million views of my 4-minute drill for traders. It's really where I was put on the map and started to be invited to all of these gigs that I've previously mentioned. As Sherry mentioned, worked for Payne Weber. I had a my own commodity trading advisory, where I ran large accounts, 250,000 and more, shared 20% of that profit. Very stressful. So about 20 years ago, we decided, hey, let's just focus on traders, and we do that through the disciplined trade. I've written many books. These are still available, I believe, on Amazon. But I think if you're here, you probably know about me, and if you've been in the business for any real length of time, you've probably seen me here and there. Tisha is somebody who's in the background, but again, is really the heartbeat. She's the secret weapon that's really not so secret anymore. Recognized as an innovator in the field of subconscious training, over 32 years of private practice. She developed several breakthrough processes, tools to deliver effective subconscious training. She really makes everything work here. All right, what is trading in the zone? Trading in the zone means trading with a calm, patient, and confident focus. Calm, patient, and confident focus. Now that's foreign to many traders, and I get it because I was there. And during the time that I ran, as Sherry mentioned, one of the largest option firm in the country back in the 1980s, I ran the home office, had 60 traders and brokers under me, and I was in charge of making sure that they communicated with the clients, making sure they were trading properly if they had discretion over accounts, and making sure they stayed in a certain degree of profitability. In any event, I noticed very quickly that those traders who had calm, patient, and a focused approach were the ones that did very well, were on the top of the leaderboard as far as positive comments from customers. So it's very, very achievable, but you must make it a goal to make sure that what you put in your mind, what you put in your brain, is serves you as a trader, as opposed to what CNBC, Fox, and CNN put in your brain, which is likely not going to be helpful to you. I'm going to get into that a little bit. So as we move us along, I want to go with the keys of the 4 major keys. The 4th one is really kind of the surprise key that is not talked about much, but it is very, very important, puts it all together. But key 1 is trading on solid ground. You have to believe in the why of your trading plan. And when I say the why of your trading plan, you're going to have difficulty sticking to your trading plan if you don't believe what the theory is behind the pieces that are in your trading plan. For instance, if you're using Fibonacci to measure retracements, looking for a market to continue its direction, and the market corrects, you'll look for the Fibonacci level. And then if the market gives you a signal to go back into the trend, you take that signal because it stopped nicely at a Fibonacci level. If you don't believe, if you don't understand what Fibonacci is, if you're using Fibonacci because you like Italian food, that's not going to cut it. You have to love Fibonacci because you believe that you understand that it is a universal law, and that whether you like it or not, spiral galaxies, arc shells, snails, even the expansion conditions of broccoli and cauliflower all follow the Fibonacci sequence and the Fibonacci law. And it's universal. And we as traders, I mean, I think Star Trek called us carbon bags. We are, we're part of the universe. I don't want to get esoteric. I'm not really that much of an esoteric guy. I need proof. I trained in mathematics as an engineer, and so I need proof. Well, I think it quickly follows that that if you look into what Fibonacci is, you're going to understand. You may not like using it, and you may not like that way of trading, but if you do use Fibonacci, you need to love it and love the conditions and all of the things that that comprise your trading plan. you need to believe in the why of your trading plan. Otherwise, when you have 1 or 2 or 3 or 4 losses in a row, you'll escape and you'll abandon your discipline, and that's where serious problems happen. So you have to have a plan, and you have to have the why. You have to believe in the why of your trading plan. Then you have to test your plan. We all know, I won't get into testing other than to say it's important. I do want to stop and talk about real quickly what I call a test refresh. I've never heard anybody talk about this, but I do it every day, and I realized last year that I should be sharing this with people. Well, before I start trading, I look back on yesterday's trading, and I see to myself, how my trading plan would have fared if I had just stuck to it. And I just look at the yesterday, because I want to know that it's still working beautifully. And if I look at yesterday and I see that if my trading plan was followed, I would have made plenty of money. That's a very positive piece of input. If yesterday in that same inspection was not the greatest day, it was a losing day or a break-even day in my trading plan, I'll look back 2 days and 3 days. Because if it's a good trading plan, you usually don't have to look back 2 or 3 days to see that if you had followed the trading plan over the last 3 days, you would have done very well. So I like I'm sorry. I like the quick test refresh that I've just explained to you. So I give you that, and if you take nothing from it, this talk, try that. I think you'll like it. Keep your plan as simple as possible. Okay, you want to keep your trading plan as simple as possible, and there are a number of reasons. I won't go through them other than to say they're easier to test for sure, and testing and having the trading on solid ground. The easier your trading plan is, the easier it is to test. And you got to find the right balance between things that you put in your trading plan because you want more confirmation, and having too much confirmation, because that'll stop you from getting into the market at all. Okay, so that's the first key to successful mental and emotional conditioning, and that's trading on solid ground. The second is believing in yourself. And I told you I'm not big on the esoteric thing, but I will say that you need to believe in yourself, whether that sounds esoteric to you or not. You have to believe that you're ready to win, because you did the work. Now, if you didn't do the work, if you didn't pay some attention to your mental game, and you didn't review your trading plan, and didn't make sure that you're on solid ground before you start, none of this is going to help you. And you won't believe you're ready to win, because you're not ready to win. But if you do the work, if you test your trading plan, whether it's every day like I've just described in a quick test format, or you've done some quick mental training. We offer something that takes you 7 to 10 minutes before you start trading. That's all you need to to perk up your mental conditioning for the trading day. If you've done your work, you're going to believe in yourself. You likely don't need to learn more. When we do our one-on-one coaching, it's very obvious to me many times. It comes up all the time that in order to be successful, you need to have that one last piece. You need to take that one last course. Stop with the courses. You probably have enough as far as your trading plan is concerned. You need to sit down and decide on the pieces that resonate with you, that I mentioned before, that you can believe in, and put a trading plan together that matches who you are. Okay, you likely don't need to learn more. You need to believe that you have what it takes to win. You're coming to the table and you have what it takes to win. I mean, a lot of traders, of course, come to me and say, boy, this person I have a friend that's half my intelligence, I think, and he's a very successful trader. Why can't I get out of my own way? Well, I think part of it is that some people have a blind belief in themselves, and that's better than no belief in yourself. You got to believe that you have what it takes to win. There are no educational requirements, as per my example there. Winning is a process. Again, your plan and your confidence, okay? And we're really emphasizing here your confidence. You've got to believe that you're ready to win, and you have to believe that you have what it takes to win. And I can spend a whole day on this, and I will one day this year, because I didn't do it at all last year, and I need to. appreciate what you've accomplished. You know, if you want to make $100 in a day or $500 in a day, and you only make 50 or 300, depending on what your goal, you've accomplished something. You can't bring yourself down and stop and take away belief in yourself when you've had some success. So you have to appreciate the successes that you have along the way. Even a small loss is a success because you had your stop in, you prevented yourself from having a more serious loss. So appreciate what you've accomplished, okay? 50% is great. All right, let's get into, so you got the first two keys: believing in yourself and believing in you and understanding your plan, being on solid ground, as we discussed. You got to keep your need low, okay? If you need to be profitable, you likely won't be. Can you afford to lose? Where would you be if you did lose? These are questions that you need to ask yourself. Once satisfied, you got to forget about your need. Okay, once you've decided that your plan has the proper stop scheme, has the proper money management scheme, that you've tested it, you've daily tested it, as I've mentioned before, and then you're satisfied with the fact that that the money that you have, if you lose it, then it's not going to change your lifestyle. Now it's time to operate the plan and not worry about the money. What you worry about, and don't worry about anything, but your job is to run your trading plan, okay? That's what we're about here, helping you run your trading plan. The wisdom of multiple streams of income. Another thing that I learned is that, you can't quit your job tomorrow and then become a full-time trader. You're much better off doing an interim thing, even if it's trading in the evening market for an hour after dinner or whatever. Get your sea legs before you leave what you're doing, because you need that. You need multiple streams of income. The more you rely on one stream of income, the more nervous you are about that income, that stream continuing to flow. By having more streams of income, takes the pressure off any one stream. And here is the key that I don't think you may have heard before, and it's really to have a support system. Traders need to be accountable. I think a lot of traders are trying to do the right thing by having a trading partner who they talk back and forth with and make sure they're on checking each other to make sure they've done. But it becomes, I have found that kind of support becomes more of a discussion of what you did wrong and what you keep doing wrong and why you can't get out of your own. It's a discussion of what is, as opposed to what can be or what should be. So having a support system, one that is outside of you and your now universe, a support system that keeps you accountable. Okay, it's just you and your computer. You've got to give yourself access to mental conditioning tools. Okay, when you join the Disciplined Trader Mastery Program, which I'm going to give you an opportunity to do at the end of this at a terrific price, I wanted to, you have direct access to us email. So you have any questions about what you're doing in the program, you have any kind of questions about how it all works, we respond to our email very quickly. At higher levels, we have one-on-one coaching, we have group coaching, but even at the entry level of the Disciplined Trader Mastery Program, which really put us on the map and made us what we are today, and we're the largest player in the mental and emotional field as far as traders is concerned, and that's because of our Disciplined Trader Mastery Program. If you give yourself access to mental conditioning tools, you have what you need to make things happen. You have to understand how the brain works. Okay, here's some of the tools that we like to use. You can create them yourself, or you can use our tools at a very nominal price for you, a one-time charge that you won't believe. Meditation, which lowers your cortisol level, okay, which is the stress hormone. Meditation is a tool that rapidly changes subconscious beliefs. Okay, it was used by Steve Jobs. It's used by Joe Rogan, if you've ever heard him on his podcast. Bill Gates, Jerry Seinfeld. I'm a big biography reader, and it's always surprised me how people that you wouldn't think meditate are all meditating. They're all meditating. They all calm themselves down, and they work with what they put in their mind. Okay, some of it is a guided meditation. like ours, where all you do is you sit in your chair for 7 minutes or to 10, I think there's 7 to 10 minutes, and relax. Take a few deep breaths, close your eyes, and listen to audio, not ocean waves and tweeting birds, but suggestions like, I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. When my trading plan tells me to take a trade, I take it without hesitation. Okay, if I lose in a trade, I know it's just part of the overall winning, so I take my losses in stride and with a smile on my face, because I know that by running my trading plan the way it is written, that I will be successful at the other end. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. If you just take 7 to 10 minutes in the beginning of your trading day before you start trading and program yourself in a positive way, like I just stated, things change, and they change quickly. And we have testimonials, hundreds of them, to prove that. Okay, positive suggestions specific to trading in a relaxed, focused manner. I've just given you a example of that. Okay, and then there's also affirmations, which is more working with the conscious mind. Now, I'm not a big fan of affirmations standing alone, but I will say that it's our experience that using affirmations with like suggestions to what you were training for in the subconscious training works as a synergy. So a lot of our traders download the affirmations and listen to it in their car. I'm not one of them, but a lot of people do, and they love it. It keeps them in a positive state of mind. Some trade in a different place than they live. So on their way to their office or whatever, they listen to some affirmations. But don't do those in place of the relaxed way. And all it takes is a few deep breaths. You got to lower that cortisol level and submit thoughts to your subconscious mind. Your mind can only think of one thought at a time. So if you're listening to affirmations, your mind is focusing on that. That's the good part of affirmations. And again, keeps the positive thoughts in front of mind. So you've got the 4 keys. Okay, you have to believe in the why of your plan, the solid ground. You have to believe in yourself, that you're capable, you've done your work, and you're ready to go, and you deserve winning. Okay, and you have to have a support system. And the third, somehow it slipped, keeping your need low, of course. As you gain more money in your account, that need will dissipate very quickly. Okay, so, and the power of synergy I mentioned to yourself, but I wanted to show you this picture. I got one more up for you, but I want to talk about this in the area of having a support system. This is actually a picture, an actual, what do they call it? A photograph, a micro. Why does it slip my mind? But I think it's the next picture. But this is actually a photograph of what's going on in your subconscious mind. These little tendrils are actually thought energy. They're energy. They're real, and they carry a particular thought. I just lost in a trade. I'm a little bit cautious, or wow, why do I keep losing? Or I've done this before. Why do I? If you have negative thoughts and you let those thoughts continue to happen without counter thoughts, okay, it's going to build a neural net. You have enough like thoughts, it builds a neural net. And when you have this neural net that I just described, created by negative thoughts from it when it comes to trading and taking on a trade, is say hesitating to pull the trigger. You're going to hesitate to pull a trigger because when your trading plan gives you the stimulus to take a trade, you will operate based on your dominant neural net, which is this right now, for that act. So that when your trading plan gives you the stimulus, you will respond immediately with doubt, and then you'll wonder why you didn't take that trade again, because your subconscious mind, what you've trained your subconscious mind to do, it believes it's true for you, and it will defend that thought. So it's your job to feed your mind with the right neural pathways so that you can create the right neural nets. And when you do that, when you do these short meditations that I mentioned, within 4 or 5 days of doing it, and committing these and creating these pathways that say things like, I understand that taking my trading taking trades for my trading plan immediately when I get the stimulus is important to my success, and that's what I do. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. You create a neural net that will serve you as a trader, okay? And you're doing nothing more than just sitting there and listening and letting it come into your head, just the way thoughts come into your head, only you're being a guided thought. And all of a sudden that creates more thoughts, self-thoughts in that same pattern. You'll create this neural net that will serve you. It will overtake, it will become the dominant, and this one will start to atrophy because you stopped watching CNBC and you've stopped watching CNN and Fox, and this will diminish as you've created what will serve you as a trader. I hope you understand what I'm saying. Here's another picture I saw recently. It was the electron microscope. Okay, this was a picture actually taken about 5 or 6 years ago. Scientists at the Cold Spring Harbor Laboratory in New York announced that they've discovered a new neural circuit linking deep fears in the area of the brainstem to control behavior. You heard of fight or flight. This is the area, the same kind of picture I just showed you, only another kind of black and white ominous version. Let's just call these negative thoughts because it's in black and white, but ours is going to be bright yellow when we do our meditations. But I just wanted to show you that this is real. This is science. So if you come to me and say, meditation, you're wrong. You'd be wrong. You'd be unadvised. I'm not going to call you wrong, but you don't have enough information to realize what the truth is. I'm giving you some of that right now, okay? And it's very easy to build your own neural nets, okay? Very easy. So let's take a look at Peak Performance Access. I want to show you that I've got about 15 minutes and just want to show you the pieces and how you can create these pieces yourself, or you can do it, or you can just have it laid out all for you. That's been tested in the form of having over 1,000 testimonials and so on over time. Okay, the Disciplined Trader Mastery Program, it's got 6 core subconscious training meditations. Okay, the first one is the hesitation to pull the trigger. That kind of turns you into the confidence to pull the trigger, as I've kind of given you a lot of examples with this. So if you're hesitating to pull the trigger, this is the one that you want to start on if you decide to purchase this, or if you own it right now and you haven't been using it. Okay, overcome thoughts of fear and greed. You know, a fearful trader is not going to live in the zone. You've got to be a prepared trader. You have to believe in your plan, and you have to believe that positive results are in front of you, and they will be if you've tested your trading plan and you're following your trading plan with the belief that you deserve to follow your trading plan. Okay, so trade with a make money mindset. This is what we used to call this with the business mindset, but trading as a business, we used to call this session. But I've really made it, I've changed it because it's kind of a raw session, which really is all about, we're here to make money, and we're here. I'd like you to frame your trading as a business, not I need an accountant and I need to incorporate. No, I'm talking about when you take a loss, for instance. That's okay. It's very similar to if I'm in a business and I advertise on a site and nobody clicks for me, and I've just wasted $500 on an ad I thought would bring in something, and now I know what not to do. I come and I'll advertise in another magazine or in another site. And so when you lose money in a business, it's all part of learning to do the right thing. Same thing in trading. It's all part of the whole of your success. Okay, so you need to frame your business, your trading as a business in the ways I've just described. That's what this session is all about. It really grounds you, especially if you've been in business and had your own business. This gets a lot of testimonials from former business owners. Strength to take your losses. There's one thing to, you got to take your loss. You can't move your stops around. So if you're doing that kind of thing, this would be the session to take. Exercising patience. Of all the sessions, this is the one that, and that surprised me when years ago when it first started coming, but it's been consistent to this day. If you become a patient trader, wait for your signals, wait for your confirmations, so few they may be. And again, I don't like a lot of noise on my charts, but if you're exercising patience, then that's what you're doing. You're being calm, and you're allowing your trading plan to deliver the signals and deliver the instruction to you so that you can act on that instruction. Patience is a virtue And trading is the prime example of why it's a virtue. And sustaining discipline is the other. There are more trainings than this. There are more for traders than these 6 core meditations, but these are the ones that most traders need right now, and that's usually all they need. Sustaining discipline is one that kind of takes a piece of all these other trainings. It's the one we advise doing less. Once you've you've created some of these neural nets that serve you, now you're on your way. You want to maintain it. And that's what sustaining discipline is all. It has suggestions that keep these positive neural nets that you've built running smoothly, like a well-tuned engine. Okay, so that's the 6 core. And trading, it's like an onion, the brain. Okay, it's like an onion. Sometimes, I would say about 30% of the time, let's say overcoming thoughts of fear. You seem to be fearful all the time. You're not. That's what's stopping you from trading in the zone. You haven't come to grips with losing money. But you've worked on some of those other things that I've said. And now you want to get your mindset straight. When you solve this, when you reverse this by creating the neural net that serves you, that gives you confidence and understands that you've done your work and that you should be positive about. When you eliminate the fear and greed, sometimes anything else that may have been a problem for you, like you also maybe need some patience, more patience when you trade, they fall away. They fall away. It's like dominoes. Okay. Sometimes you need to, if your neural nets are big in each one of these areas, then you need to approach each one of these areas with its own, week or 2 weeks of mental training, just 7 to 10 minutes a day. But it's all a process, okay? But what I'm saying is that sometimes when one falls away, they all fall away like dominoes. Other times you have to work. It exposes things that you don't know. So until you get started, you won't know. But it's really an immediate thing for about 30% of the crowd, which is kind of exciting. Okay. I'm also going to give you the 208 4-minute drill for traders. I mentioned we have I believe it's over 2 million now. I thought it was 1.8 recently. I'm sure it's over 2 million, but if it's not, it's close to it. Views, but they're all around the web and they're on YouTube, but you got to search for it. The same login that you use for the meditations, they're all there for you. Okay, and here I just took a screenshot of part of it. Again, there's 208 of them, but look at some of these titles. Psychological impact of losing money. I give you 4 minutes right between the eyes of proven truths about the psychological impact of losing money and how you should frame it so that you can move ahead, and why we do what we do and why you should do some of the things that we are suggesting that you do. Capital preservation. You've got to preserve your capital. And I give you the main points in 4 minutes so that you have it for yourself. And so just scroll through it. Some traders just open it up and close their eyes and point to it. And because they love all of them, and they're always surprised on the information they got from something they didn't realize was in that particular 4 minutes. So are you realistic about risk? Whatever it is, I want you to have these. These are instant motivators, and I want you to have them all in one place. I'm giving them to you, 208 4-minute drill for traders. This is only for the beginners, okay? It's the basic series, only for beginners, okay? Build and running your trading plan. These are 1-hour webinars that I did on these topics. Listen, if you're an experienced trader, it's not a bad thing to go back and look at these and just get the basics down, because you need the basics in trading. But I do want to say that if you're an experienced trader, you want to go right to those core elements. You want to start the mental trainings right away. Those what I just showed you. Okay. And I also want to give you the Dispensarita Lifestyle section. Sherry asked me about when Subconscious Training Corporation started, and I answered with the fact that we used to have 9 different mental trainings, 9 different subjects. We used to, in fact, our Golf Mind software, which now in digital form is still being used by professional golfers. Bernhard Lange is on the cover of one, and it was done by Jim McClain and the psychologist that works with him, Fred Pirozzolo, who was the psychological coach for the New York Yankees in the 90s when they were winning their World Series. And what I'm saying is that we have great content in every one of our every one of our softwares that we put out. But of course, software became, discs became, forget it. And so, and we wanted to concentrate instead of trying to serve everybody in all walks of life. We have one for traders, we have one for golfers, we have one for tennis players, for students to help with their relaxed test taking. We've got one for entrepreneurs. We had one for sales professionals. Instead of doing that, we decided, forget all that, we're going to just help traders. But we have all these sessions sitting here on the shelf. We put them all up for you because what was happening was that about 5 years ago, traders said to us, we would like banged our head and said, traders keep asking us, do you have anything for our other parts of our life since we've been able to transform ourselves as traders? I have I'd love to lose weight, or I'd love to. We have it for you. I'm giving you 101 life-changing meditations that have nothing to do with trading, except for there's some additional trader meditations here, coping with losses, letting go of negative thoughts, and a few others. But look at all these topics. I want you to have these for yourself that you can utilize but have success first in the mental, in the trading realm. And after that, I think you're going to want to work on other parts of your life. So I'm giving that to you too, because we had it sitting on the shelves. Traders were asking for it. So, and don't start on better sex unless you really have to. Okay. The Disciplined Trader Mastery Program, information in your program is unbelievably valuable. Keep up the great work. You're helping many fledgling traders like myself to improve and be consistently successful. And you don't see this a lot, talking about almost getting there, or it was really, really great the first week. You can become consistently successful. And that's Craig out of Lincoln, Nebraska. Here's another one that just got a few weeks ago, Tybor, who said, thanks as a subscriber to your program, helped me. A lot of things have been coming together for me. Plan, psyche, risk management. I've been becoming more consistently profitable. Again, profitability, not just talk. Okay, I want you to make money. I want you to be profitable. But to do that, you're going to have to believe in your trading plan, believe in yourself, and you're going to have to do that through working with your mind. Okay, I'm not going to read all of these because I only have a few minutes left. But needless to say, these are just clips of testimonials over time that I use in another media online. But I thought I'd just put them up here just to show that you're not alone in where you are and where you want to be from a mental and emotional standpoint. And I think the next speaker actually has an extra appreciation for the mental and emotional. I can see the way he talks about his trading. So I just want to make sure that you have an outlet, you have training material to be in that top 10%. What it's going to take is the something like the Disciplined Trader Mastery Program, but not just owning it, using it, just spending 7 to 10 minutes a day on those subconscious trainings. Okay, our 30-day no risk to you guarantee just states that if you're not experiencing a shift into the zone when you're trading, that relaxed zone, confident focus, we'll refund your investment, no questions asked. It's as simple as that. Okay, if you're doing the trainings, you'll get the results in 30 days, and you'll start to see that calmness make it happen. Here's a fast action bonus for you. I wanted to give you, I mentioned I like simple trading plans. For those that didn't have trading plans when we were training them on the mental, I created a few trading plans years ago. These are the 3 original. I want you to have them. I'm not going to go through them other than to say the first one, they all fit on one sheet of paper. A lot of people use these trading plans, these processes, and include them in their current plans. Some use them just as they're written. The first one is the big move potential. It tries to catch big moves. Okay, it's not a good idea in general, but if you're going to do it, this is a pretty good way of doing it. The second one is a continuation plan. I kind of talked about it a little bit before. Market has a movement, creates a trend. It starts to retract from the trend, and you're wondering whether it's a new trend on the other direction or it's just ready to resume the trend. This gives you an idea, gives you a plan so that you can recognize if a trend is about to continue and not reverse. And the extremes plan, it really uses Bollinger Bands to help you to take advantage of the excess that's created by extreme moves. I want you to have these 3 simple trading plans as a bonus. If you order this by 5 o'clock today Eastern time. Okay, I want you to have these 3 simple trading plans. So here's the offer. The core mental trainings that I mentioned to you with a $1,200 value. We've gone through these, all of the 4-minute drills in one place, the basic series, and I want you to also have the 100 meditations. This is the value, $39.31, and I've given these very conservative valuations, but I'm going to give you 90% off. Look, it's a new year. I want you to start training your mind now, so that when you start the new year, you'll be where you want to be. Okay, $397, and don't forget the fast action bonus if you're active for 5 p.m. today. The disciplinetrader.com/mastery. Okay, the disciplinetrader. You should be able to click that. If not, just write that down. And if you put it in the chat,
I put it in the chat.
Beautiful, boy, you're fast. The disciplinetrader.com/mastery. I wanted to make sure that you had this for yourself. I'm just going to take one more minute. This is what it's going to look like when you go to the disciplinetrader.com/mastery. I've given you kind of another summary, but it doesn't include the fast action bonus, the 3. So I want you to see, even though you see it here, if you do order before 5 o'clock today Eastern time, you're going to get those 3 trading plans also. Okay, I think this is just other programs that we have, but I want you to start here. It's showing $697. I'm giving it to you today for $397. Okay, $33 a month. So I really want you to have that. Write it down, because the next speaker I'm sure is ready to go. Sherry, thank you so much for helping me to help traders.
That is fantastic.
In the often avoided area of and the mixed ego responses that one gets to helping in the mental. Listen, you can do this.
Yeah.
You just need to do it the right way. Thank you, Sherry.
Thank you so much for being with us, Norman. I really appreciate it. And I wish you the very best and Merry Christmas. If you do Christmas. And if you don't, then happy holidays. And I really definitely will be looking for you to come back again.
I appreciate that. I can't wait for the new year too.
Thank you. Have a good day. All right. Let's see. Our next presenter is here with us waiting. And first I have to do a little housekeeping. Sorry about that. You're going to want to, if you have to leave early, it's okay. We have a recording. You go to tradersexclusive.com/archived_webinars/. And I have a little diagram here on the screen where you just go to our homepage, tradersexclusive.com, or you can type in this, it'll take you right to the page. But if you go to tradersexclusive.com, on the right-hand side, that's my dog looking for his ball. I'll get it for him in a second. Anyway, if you have to leave, it's okay, because we do have a replay going up. And I also wanted to show you our next speaker is Paul Lange of Discipline Trading Strategies, and talking about being a consistent trader. He started Discipline Trading Strategies in August of 2017. Okay, just a second. Give me just a second, guys. I'm going to go get the ball for the dogs, so you don't have to hear this. Stop. That was right there. Well, the dogs love to make an appearance, don't they? Sorry, Paul. Let me just do this. Discipline Trading Strategies is a site for traders and investors. And he runs a very popular day trading room and also publishes the Long-Term Trader, a portfolio for hands-off long-term investors. He also provides a ton of free information on the DTS Free Stuff page, which you're going to hear about and see. And he gives a lot of assistance to new people on his website. And the best seminar program for those that are interested. So Paul is a very experienced trader and investor with 20 plus years in the trenches every day. Thank you so much, Paul, for joining us. And I apologize to everyone for the background noise here. You with us, Paul? I think you have to unmute yourself. There you go.
Hi, Sharon.
Hi.
I am, and thanks for the introduction. And I just hope that my dogs don't interrupt me when, as I do.
He's usually very quiet. He's sitting there looking at me, wagging his tail like, what do you expect?
Let me see if we can get our slides up today. How's that?
There.
You got
Yes,
it?
being consistent as a
Good.
trader. I
Good job.
see it.
Well, first of all, I want to say, if Norm's still listening, Norm has some good stuff to say, because traders, trading, investing, whatever you want to call it, at some point your future, your success depends on really how you manage things. And managing is very psychological. And the shorter the time frame that you're on, the more psychological it becomes. So whatever you do to conquer that is a very important topic. So he had some good stuff to say. I don't normally hear much of the speaker before me or after, but a lot of the stuff he says, I would say also. And I thought there were some good talks that he had. So you should have a slide up there saying be a consistent trader, and the next slide is simply what you probably saw already in the email that went out from Sherry. What I really want to talk about is consistency. What does it mean? And it may not be exactly what you think. This is going to be a boring talk. I'm a boring trader. What I like to do is make money and to try and keep it simple. And you may not agree with everything I have to say. I'm not going to take any more time introducing myself or anything, because I feel if you don't like what I have to say, you don't really care who I am. And if you do like what I have to say, you'll probably search me out. The discussion points here we're going to go over. And first of all, I just want to make this quick little comment here, is that I'm just here to talk to you and to share some knowledge and to try and convince you of the right way to go about things. And when I say convince, I do kind of mean that. There are different ways to make money, without a doubt. If you're going to trade Forex or the stock market or futures, meaning the market itself or individual stocks, there is only one way for you to make money, and that's to understand technical analysis and understand charts. I don't go into that in this presentation today. If you decide to follow me or to become a free member at DTS, there you'll have the opportunity to attend some free presentations that discuss some of these topics and why technical analysis is so key. But I have nothing to offer you today, just so you know. I just make sure you understand, if you're going to spend your next 45 minutes with me or whatever's left, that I don't have anything to offer you special. I don't have deals or sales at DTS ever. I love what I do. I enjoy what I do. And right now I'm in that perfect little spot for me where I just simply enjoy helping people and making successful traders. I do have paid for services, both if you want to learn through a seminar educational program that has a home study course, or if you want to just get the trades in the trading room and the long-term trader. But you can figure that out for your own if you go to the site, if you want to do that eventually with me. Most people want to kind of get to know their person that they're learning from. So what I want to do today is just share some thoughts and experience with you and try and teach you what I can about the topic today, which actually may sound boring to talk about being consistent, but it leads to a lot of very interesting topics. So if you're waiting at the end, I'm just going to ask questions, and I'm not going to have anything to offer you, anything special or anything else. What I do have, cue Sherry, is a lot of free information that you can get from the DTS free stuff page, and Sherry should be hopefully typing that into the screen right now, unless
and I'm putting it in right now.
I'm not sure if you gave me the power to do that or not. Did you? I don't know. Nope, I don't think so. That's okay.
I didn't, but I will.
If you have that link, that goes to the DTS, which stands for Discipline Trading Strategies. It's funny, both of Norm and I have the word discipline in our titles, and it's probably not an accident, because that's what the psychological part comes down to, is having discipline.
But you know, you said you don't have anything to offer. Yes, you do. That free stuff page is crazy packed with value.
It is. I had somebody just sign up for the seminar program, and they said the first thing they did was they went to the free stuff page, and they said, Sherry, they spent 8 hours a day for 6 days, and they didn't quite finish everything. So there's a lot of stuff there. And
honestly, that's a really good way to ramp up to be where you are and to really make the most of your material, isn't it?
Well, there's 3 purposes of it, Sherry. People ask why I do that. There's 3 purposes. Number 1, I want to make it clear. You don't learn to trade from that site. That's what I teach in the seminar program. What I teach in the seminar program is very simply how to read a chart, the battle between bulls and bears across multiple time frames, how to read it. It's a technical analysis is a wonderful thing, and it works great if you understand it. But the free stuff page has 3 purposes. Number 1, it's supplemental material for people who take my seminar program. They're required to know all that stuff because it's great additional stuff. Number 2, for anybody, if you're going to sign up for, like, share like a room, sign up for somebody for a month with any product that costs a couple $100. Nobody cares about that because you can just quit if you don't like it. But if you're going to sign up for the seminar program, it's more expensive and you got to really know that person. And this is a way for people to get to know me because you hear me talk for hours and hours and hours if you really want to. And the third thing that I encourage people to do is if you feel you want to learn to try and trade for yourself, and I can't knock that because I tried to do that a long time ago, 22, 23 years ago, I tried to do that. I feel I'm a smart person, I'm a type A person. I couldn't do it. So, I eventually got started down the right road by learning some things from other people, and that kicked my brain into gear and get me going. But I encourage people, if they want to try to learn on their own, to go there, because it does two things. Number one, I'll even help you. If you email me with some trades you've done or whatever, I will take the time to help you if you're new. I'm in, like I said, I'm in that spot where I enjoy making successful traders. I have a lot of them right now that are successful traders who've come up through me. I love doing that. We have fun in the trading room every day. I always joke that people get charged extra for the humor in the room, but we're serious about our trading and we make our money. But the free stuff page is a great way for you to try to get some of the understandings down. Somebody told me the other day after I did a presentation that what I say in these presentations is very philosophical, and he said it as a great compliment. He said, I know you're not teaching technical analysis per se, and I want to warn you about that too. I'm going to show you a couple trades and some things that I did, but I'm showing you the end product, and seeing the end product does not tell you how to get there. And I don't want to make a big deal out of it, but there's a lot to understand in technical analysis. People take what I always kind of joke around, the 101 version of technical analysis, and many of you probably have experienced this. You learn just enough to lose money slowly. And that's not a joke. That's, many of you can relate to what I'm saying. You have to get beyond that. If you're, hearing things about simple concepts about what support is, and oh, you better take your stop in that area or you're going to go to trader hell, you're probably losing money slowly, and that's not the goal. The goal is not to minimize losses. The goal is to maximize profits. And while I'm on a little spiel here outside the slides, getting to the psychological thing, Norm had a lot of great ideas on things to help conquer that. People who are new don't understand or care about the psychological part because they think it doesn't matter. They learn very quickly. It does matter tremendously. I'm going to show you something in these slides coming up very quickly, how trading is so psychological and you can't avoid it. But how do you conquer the psychological part? Well, Norm has some ideas, but it's like, to me, it's like dieting. I know people that diet. And there's some people who can just say, okay, this is what I'm eating from now on, and they're good. They just can do it. They just have the willpower, the strength to do it. Some people have to not buy the food. If you don't bring it in the house, you can't eat it. Some people don't eat for 3 days, and then the fourth day they eat 5 times what they would eat in the prior 3 days combined. So everybody's different how you handle that. And it's the same thing with trading. There's different things that Norm presented that are, kind of more in-depth psychological things. But my thing is this, and I don't know if I'm not going to ask questions because I really don't have time to wait for your answers or anything. But if I were to ask you, what do you think the key is to overcoming psychology? The answer to that is confidence. And if you want me to prove that to you, it's very simple. If any of you have ever done any public speaking, and when I ask the question in a public forum, usually about half the people will say they've done public speaking in a job, in a whatever, somewhere. And if you think about it, if you are speaking on a topic that you're well versed in and you have confidence, like I'm talking to you right now, I have no fear whatsoever. I have total confidence. I have zero fear, zero psychological issue. And I'm talking live in front of people too, up to a couple hundred people. No fear whatsoever, because I'm talking about trading. And if somebody there's no question that I can't answer. If somebody challenges me, I will debate them and I will win the debate because I know what I'm talking about. Now, if you got me up here and wanted me to talk about string theory or something that I really don't have any clue about, I would be nervous as can be because I don't really know what I'm doing. And it's the same thing trading. When you can look at a trade and say, you know what, that stopped out, but you know what, I did the right thing. I know that's the right thing. I'll do it again tomorrow. And only if I prove to myself that that is the wrong concept will I change. When you can say that, then you have confidence. Right now, when people stop out of a trade, they're clueless. I mean, a lot of people, they just don't know because they don't know what they actually should be doing. It's all kind of a guessing game. So anyways, now I really, I thought that was a good talk. At least I thought it was. So I have to kind of fly through the rest of this here. Never a sale at DTS. I'm not going to have any special offers, what I meant, Sherry, at the end. No special offers or anything, but you do, or you will have access to the free stuff page, and I do encourage you to get a hold of me if you want to. My email is simply paul@disciplinedtradingstrategies.com. Paul, P-A-U, at disciplinedtradingstrategies.com. So feel free to get a hold of me. And I want to point this out to you too over here. It says there's no holy grail. This to me is one of the biggest concepts that I have to get across to people. Everybody's looking for the shortcut thing. And, you know, to be honest, I'm glad Norm was on before me because, you know, he had a good talk about something that's important. But sometimes I kind of hate coming on after somebody who's talking about magic systems and, you know, magic chart reading and green light, red light and all these things because they don't work. I mean, if they did, if there was this holy grail that you could just plug in something and make money, you know what, I would use it. I would teach it to my people. I would say, hey, let's use this. But making money comes from just simply understanding a chart, understanding what incredible information is in a chart that you can learn from. It's not absolutes in a chart. There's some psychological, or there's some subjective analysis involved. You can't avoid that ever. As a matter of fact, I'm going to talk about that. So let's get going. How would you define consistent trading? List some things that you would consider to be trading consistently. Some of the comments I get from new people in the room. Paul, we were bored the other day and then you had 3 trades in 30 minutes today. Can't you be a little more better at spacing them out? As if I had the power to do that, right? I took yesterday off and you made the whole week's goal. Can't you spread that out so it doesn't matter if you miss a day? Some people think of that as being consistent, like you pull up your chair and every hour you're supposed to make a certain amount of money as a day trader. Every week you make a certain amount as a swing or a long-term investor. And that's complete garbage. It's not true at all. Every day, every week. And by the way, I am both loving long-term trading. I call everything trading, but long-term holding things for weeks. Short-term trading as day trading. I'm not a scalper type person. I day trade, usually hold a half day, a day, whatever it is. But you know, not a scalpy type of person. But consistency has nothing to do with making the same. It has to do with being consistent in the trades that you take and what you do. Every day, every week offers different opportunities. There are some days where I can say to the room, hey, you got nothing to do here. I've had days I've not taken a trade or taken one trade only because there's just nothing to do. And that may sound terribly boring, and it is. But unfortunately, too many people are hung up on this thing where you have to be constantly doing something. And unfortunately, that something usually turns out to be losing money. You only need, as a day trader, you need 1 or 2 good day trades a day. When you get to that free stuff page, there's a section called the Hall of Fame, which is a great spot to start. And one of them in there is, to me, one of the most important ones you can watch. And it's called From Chart Reader to Trader Investor. And it kind of talks about the emphasis of just having the patience. As a day trader, you get one good trade and you size it properly, meaning you have the proper risk amount, and you make your whole day's goal from a trade. You make a whole week's goal from 2 or 3 trades sometimes. That's the way it works. But you can't do that, of course, until you can build up to that type of share size through confidence and through doing it slowly. Moving on. Sally sends her trading summary for the day. And this isn't a topic about what is consistency. Trade 1, 2, 3. So Sally sends you her day trading results, using day trading examples here, but all this applies to long-term as well. And she lost $50 for the day. She made 200 on a trade, made 150 on a trade, made 50, and then lost 500. And the question I ask at this point, again, which I don't have time to really wait for responses, is what advice would you have for Sally? Do you have any advice? And the common answer I get, 90% of people say, yeah, Paul, she needs to limit her loss to, let's say, maybe $100 or something like that. If she would have done that, Paul, she would have limited her loss. She would have had, I don't have a little marker here, but she would have had 400, she would have limited that to 100, she'd have 400, she would have made $350 that day. Do you agree with that? Do you agree that that's a good thing? That she should limit her loss to $100 and she would have made $350 that day? Do you agree that if she would have limited her loss, she would have made $350 that day? The answer to that question is no, that's not true, and that's not good advice at all. We don't know at all that she would have made $350 a day. As a matter of fact, she may have lost a lot more money. And you're saying, Paul, how can you possibly say that? Well, what if in order to make this $200, she was at one point down $300? What if Marina made the 150, she was down 300? In other words, if you were to limit her to a 300, to a, let's say a $200 loss, it's possible these all would have been losing trades and she would have lost $1,000. Do you see that? Do you agree with that? So what it involves is a more deeper understanding, a more better analysis. Do I have a pen here? Can you see that when I draw? No, you can't. Something weird just happened. Let me stop that. Oops, not going to do that again.
We may have some technical difficulty here. I'm sure Paul will be right back. Hold that thought.
Yeah.
Are you back? There you go.
Yeah.
We lost your
Yeah.
screen though, I think.
It should be back, isn't it?
Why don't you reshare, please? Because what I'm seeing, let me just double check.
Got it now?
I can't tell what the view is right now, except for I have it on a separate screen and it looks like, yeah, Jack says your screen is gone. You need to stop sharing and then reshare. Sorry about that. There you are. Okay, sorry.
Yeah, no, I tried to draw with a marker and that did not work well with this software. So let's go on to the next one here. So next we have, this may also seem familiar to you too. When you start trading and you're at a low risk amount, so let's say you're risking $50 a trade. You have a great trade, you made $200, you lost 150, you made 150, made 50, you made 50, and then you lose $500. This is a typical new trader. There really is no control over their loss. Now, if you're at a $50 risk, if we know that, losing $500 would be just completely unacceptable, correct? So that's a new trader that is very gutsy, goes out there and takes the trades, makes some good money on some trades, and then all of a sudden coughs the whole thing up on one trade. This is the typical new trader. But what's funny is if you fast forward and that trader gets better and now they're risking $500, all of a sudden you find out that they make 200 on a trade, 150, 50, 50, and then they lose $500. And what's funny is if you look at these numbers, they're exactly the same numbers. And I suspect that a lot of you, if you were going to type, you would say, hey, I've experienced it, right? These numbers are exactly the same. What's different? Well, here you were a gutsy trader risking $50 and didn't take stops. And here you are a seasoned trader who cannot make profits. So you're following your risk on. A $500 loss is fine if that's what your risk amount is, but you're making all these piddly little trades and you refuse to make more because you can't manage the trade properly. You're always getting out with a small profit, you have a small loss, and it's a break-even trading concept that many people get stuck in. Most traders, when they think they know technical analysis, they get stuck in what I call break-evensville, where they just can't really make money. Nobody likes giving back profit. Nobody likes that. But taken to the extreme, it guarantees failure. If you fall asleep listening to me so far, listen to those words. If you take it to the extreme, if you refuse to give back profit, it guarantees failure, right? Or if you're a good, it guarantees break-even results. You can't do that. What do you say about this 2 days of trading? Monday, trade plus 200, plus 150, plus 50, plus 100, minus 200. Made $300 for the day. Tuesday, big loss, big loss, big loss, big win, big loss, plus $300. Came out the same, but you got there in kind of a crazy way. Which is better? Which is more consistent? Again, I want to emphasize to you that there is no answer to that question. Neither one is better or worse. We have to see the trades and also understand what the plan is. This plan on the right actually can be the most successful way of trading, where you go for the big score, and along the way, you're going to take more stops. So you stop out, stop out, stop out, and boom, and then you make 6 times the money you risked all of a sudden, boom. This is, unfortunately, I'm not saying that's the way you have to do it, but this is where a lot of people end up, where they're just constantly, chipping away when they have a profitable trade. they sell so much of it so quick that they never really make any real money. On the left, you're never going to make money this way. Again, we're not sure exactly what the plan was underneath these, but I just want to point out that there's different ways to handle things financially, but the way most people handle it guarantees they're never going to make money. The time is, I have till 20 minutes, okay. What do you say about Monday's management on slide 10? And the issue here that I'm bringing out is you're supposed to be risking $500, right? And here on Monday, we let 2 trades go to 700. Now, I know some people that would say that that is the hallmark of a bad trader, that you will go to trader hell, that you are going to be unsuccessful. As a matter of fact, that's what everyone is taught from the minute they start trading. However, this is a very 101 approach also. This is a very novice approach. One of the most successful things you can do is understand how to manage stops. I would never say that you trade without stops. That would be silly, of course. But managing stops is one of those profitable things I teach people. What if I told you that bending your stop $200 would have cost you $200 on 3 trades, but made you $3,000 on the 4th trade? What if that was a consistent pattern that you had? You'd be silly not to look into doing that. It's the pure fear that most people have, and the teaching that you get when you are initially learning technical analysis 101, that you are some type of rotten person if you let your stop go 1 penny beyond where it's supposed to. It's true, there's a slippery slope once you go beyond where you're supposed to, but if you have and understand a concept of managing stops, where your actual stop may not actually be where it originally starts out to be, as long as you follow your hard stop at some point, you'll be a successful trader, and you may find you make a lot more money. So I'm trying to break a lot of myths out there. Truly successful traders, you probably don't recognize what they do because it's very different from what you've probably seen in the Trader 101 videos, where you have a buy setup on a chart and you follow that and blah, blah, blah. Most of that doesn't work. Another thing of consistency I want to point out is that people think that, oh, every day you should come in with the same amount of money as a day trader. Well, nothing could be further from the truth. Every day offers different opportunities. This to me, I've promoted this since I started trading because it was true for me, and I found it was true for most successful traders. This is a typical week for a trader. Have a small winning day, a small losing day, have maybe a moderate losing day, a big winning day, and a nice winning day. These little days, I call these McDonald's days. And what I want to really point out here is that failure for people, even new traders, does not come typically from having big winning days. They typically have those. They typically have a good day here and there. They typically have their losing day. And if they're a moderately experienced trader, they learn to control it. The problem for most intermediate traders is those days where there's just not a lot of great opportunity. Can you relate to that? And you're up a little bit of money or you're down a little bit of money and you don't just walk away. Is that true or what? True? And you find out that a day where you potentially could have made a few bucks or just lost a little bit, you end up with a bigger losing day. And this is what tears apart your account. Most people will have the winning days. Now, if you're not a good trader, you're probably not going to have as good of a winning day or as big or as often. But I want to really point out that your account gets torn apart from sitting there and continuing to chip away at things when you don't have the odds in your favor anymore. I focus on the first 90 minutes of the trading day as a day trader. Why? Because that's when I feel I have the best odds. I don't think any day trader should sit there all day. I think you're guaranteeing failure for yourself. But you can pick your time, pick your 2 hours every day. I think the morning offers the incredible opportunities the rest of the day does not. And once I lose my edge, I'm done. I walk away, I quit. I don't sit there trying to make something out of something that's not there. This is the failing pattern that so many traders fall into, that they feel they have to make their money every day and they push it. And then they take a small winning day. And I call these McDonald's days, the little small winning losing days. You have to accept them. If you have a couple nice winning days that week, all you have to do is make sure you don't give it back on the other days. But yet, what do traders do? They give it back on the other days, very continuously, very regularly. You have to stop that. I want to prove that to you that, and again, when I do presentations, whether it's a trade or whether it's showing some results or something, I never go back to 2 months ago, or to 3 years ago, or to the summer of '97 when, whatever. I just take recent stuff. And I want to pick out good examples of things. So I'm doing this presentation today. I prepared it over the weekend, and this was last week. Now, in all fairness, this was a good week. So I'm not, not trying to blow any smoke here. It was a double the goal week, I would call it, but the pattern is still there. If you look here, this is just our trading results from the room for that week. And this is basically mirrors what I do. Over here is the total for each day. So small winning days, 1, 2, 3. Now, these were like kind of extra good weeks. So maybe take a little money off all that on a typical week, maybe take $1,000 off everything and call one a small winning day, a small losing day, and a break-even day. That's the typical 3 days that you see, right? Lost a little bit one day, McDonald's days, the other 2 made a little, lost a little. I didn't push it those days. In other words, whatever it was, I said, okay, that's all I can do. I'm done. Notice this thing, notice Thursday, one trade. I felt I didn't have the odds. I'm not going to sit there and give back money from the rest of the week. And then, of course, what makes the week is a nice winning day there, Wednesday, on 3 trades. And then Friday I just got lucky on Friday. Just everything kind of worked on Friday, just boom, boom, boom. But this is, I think, the pattern that you see a lot of times. And again, the teaching moment from me to you in this little presentation here is that, of course, you have to learn what you're doing to be able to make money at all. But once you do, the key is to understand the management of your trades and of your account, and to constantly be reviewing things so that you focus on the times you have an edge, pushing the button hard, pushing when you need to. I have a saying that I didn't put it on the slide here, but it just came to my mind. It's one of my favorite sayings, actually. And the first part of it may even shock you, because it's not the type of thing that you would hear most traders say, especially traders that are educating other traders. But the first part of this is very simply, it's okay to lose money on a trade. As a matter of fact, be careful, you might want to cover your ears if you're kind of, squeamish. It's okay to lose more money than you intended to on any day or on any trade if you had strong conviction that that was a trade that you're supposed to do. It's perfectly fine. That's my philosophy, because you don't make money by just being constantly overcautious. When you see the opening, you have to go for it. You have to hit the button. You have to get in there with the risk amount you want to use. And if you're wrong, you know what happens when you're wrong? You lose money. Any of these idiots out there telling you that, oh, when you're wrong, just minimize your, no, when you're wrong, you lose money. That's what you should do. You should be proud of it. If you got it wrong, you're going to lose. That's all there is to it. However, while it's okay to lose money when you have strong conviction, it's a sin. It's a trading sin to lose more than a small amount of money if you're clueless that day. I want you all to remember that and think about that. If you're sitting there just looking for a trade because you're bored, and it's like you're watching TV, get up and leave the screen if you're day trading. The same thing applies, though, to longer term. You can't sit there and say, oh, I have some money in my account, I gotta put it in the market somewhere, let me find something. That type of attitude has you losing money. You wait until there's a moment that is so fantastic, you can't stand the thought of not taking that trade. What's key to knowing that, though? You have to understand what is so fantastic. You have to understand charts, understand technical analysis. So how can you say inconsistent results is not inconsistent trading? The only way that all trade outcomes would be the same, if every day would be the same, is if every trading day, every stock, forex, future setup was the same, but they're not. Everyone is like the fingerprint. Every day is different. Today is a pathetic trading day. And that doesn't mean that some of you didn't make money. The key to me is finding those unique things. And anybody in any day could find the right setup, the right key thing, got that stock at the right moment. But in general, there are less opportunities out there today. Why? Well, because the market's been sideways the entire day, because there weren't any gaps that I like to look at to speak of very much. So it's just a lower odds day. Every day is different. There's some days where I can't hit the button fast enough, right? One of the biggest trading demons is requiring the always different market to conform to what we expect. You cannot force a good day when the setups are not there. Period. That's all there is to it. You have to accept that. But deciding when the setups are there, what does that mean? Well, I have to tell you that most all people, I'm willing to bet 90% of you listening to me, could not pass the test with me, so to speak, on how good you are at technical analysis or understanding objectively how to read a chart A lot of people think they are. A lot of people are just bullish in bullish markets. But it's a real skill, and it's something that being objective can only go so far. When traders come to the market, they're 100% subjective. And your goal is through teaching and learning and understanding technical analysis and charts to become as objective as possible. But there's always going to be some subjectivity involved. Do you believe that? Do you believe there's always some subjectivity involved no matter what you do? I can prove it to you real quickly. We're going to do this very quickly here. For one thing, if I asked all of you what you prefer, pullback or a breakout, a 1-minute chart, a 25-minute chart, a 15-minute chart, a 60-minute chart, a 5-minute chart, do you prefer the first half hour, the first 90 minutes of the day, lunch, afternoon? Would you rather go for a home run and have to take the trade 3 times to get it right, or go for small profit but play trades once, win or lose? You're all have different answers to that. So everybody is wired differently in terms of what they like, what they've learned, and a lot of it is based on your fears from the past. You know, some of you had bad trading experiences, and that's why, boy, you won't let a stop go 1 penny beyond where it's supposed to, because one time you lost half your account doing that. So we all have these demons that we have to deal with. But here, aside from that, just the most objective thing that I could ask you is on a chart, and so I assume most of you here understand charts to some degree. I have 2 candlesticks up there, and I'm going to ask you the simplest question in the world, left or right, which candlestick is more bullish? Now, the first candle here is just a gimme. Obviously, this is a big green candlestick. It's very bullish. It's a very bearish one. So the first answer to this first question is easy. It's going to be boom, boom, 1 or 2. Everybody's going to answer 1, right? I don't need to survey you, and we wouldn't have time anyhow. Let me go to the other extreme and show you something else. What the candle on the left is green, candle on the right is red. I'm going to go to this setup now, where the candle on the left is green still, and the one on the right is red, but which of these 2 is more bullish? And I know, because I've done this many, many times, that 100% of you will say the chart on the right, the candle on the right, right? Because that little bit of red or green doesn't matter. It's that big bottoming tail, which shows that he had all those buyers going in at the close of that bar, right? Everybody agrees with me so far, I'm sure. So let's start walking it down. If right now, if number 2 is more bullish on that setup, is number 2 still more bullish? 1 or 2, what's more bullish? I know what you're going to say. All of you still say number 2, no doubt about it. Number 2 or number 1? You're still probably saying number 2. Number 2 or number 1? Number 2 or number 1? All of a sudden now, let me ask you, which of those candles is more bullish? I could keep changing those candles. If you didn't split exactly 50-50 right there, I could just increase and decrease the size of each of those candles until you all split exactly 50-50. So if 100 of the best traders in the world cannot even agree on whether the candle on the left or the candle on the right is more bullish, how can we say that trading does not involve some subjectivity, especially when you consider that it's not a matter of reading one candle versus another. It's a candle, a 5-minute chart that interacts with an hourly chart, that interacts with the daily chart, with the weekly chart, the time of the day, the time of the month, the relative strength, what the market's doing at the time that you're taking the trade, all these different things happening at one time. And you have to synthesize that and come up with what you consider to be the picture of a perfect trade. There's no way that you can tell me there's not subjectivity involved. And that's why I'll show you in a minute here a slide that I have that involves what I call the 3 legs of the stool. You need superior technical understanding. You also need to understand math and probabilities, which to me is a big part of trading. And I don't mean just risk reward and simple, blah, blah, stuff like that. I mean, understanding what I call a moment in time, because that's how I trade, by a moment in time. And it kind of reflects the concept that it's one of my favorite sayings. I think Douglas said it actually, that you don't have to be right to make money. You don't have to be right to make money. And too many traders are focused on being right or wrong rather than making money. There's a lot of truth to that statement. Boom, boom, boom. And pretty soon we're back to, of course, the big bar on the left. What are the setups? Well, they are your strategies. They are what you require to see in order to take a trade. There are many correct ways to trade. There are many incorrect ways to trade. All good trading is technically based, period. There is no other way to trade unless you have multi-millions of dollars to do your own personal fundamental research. Your own, and I doubt anybody listening is in that position. If you don't have that, do not tell me that you're going to go to the website that 270 million other people looked at today. And you're going to read it and you're going to develop an edge because you're smarter than the rest of the world. That's how traders lose a lot of money, with that type of mentality. In essence, you can reduce your setups and everything you do in trading to following a set of rules, because that's what it really is. There's something very recently, I just heard somebody say that, oh, here's this concept of whatever it was, and it really was just a simple strategy, and calling that your trading plan. A strategy and a trading plan are very different things. A strategy is a particular setup on a chart, and a trading plan is how exactly you are going about entering, trading, managing, exiting for a profit, exiting for a loss, how you're personally going to do that. There's a big, big difference. Copying a strategy from somebody is not your trading plan. You will lose to the end of time if that's what you think is going to make you successful, because trading is not 100% objective. There is no system that makes you money all the time. There is no computer software program that makes you money all the time. There is no magical green light, red light, stochastic technical indicator that makes you money all the time. If there was, I would use it. I've been around forever. I would use it. I want to use anything that makes me money. I don't care what it is. As long as it's legal, I guess. Anything that'll make me money. And I found the answer to that. It's understanding how to read a chart, because that is the synthesis of everything that's out there. All the news that's out there, all the economic data, all the feelings on the chart. You can't tell from reading it. You can tell by seeing the battle that occurs between the bulls and the bears in every time frame, in the pertinent time frames that you need to know to make money. Rules to identify setups, rules for entry, rules for stopping, rules to manage to get to the target, rules of money management. These are all things that you will fail if you don't understand them. And I hate to keep saying you will fail, but you have to understand the reality. It's something like 90–95% of the traders that come to the market fail. I don't know what failure means even. I don't know how true that is. It's what everybody says. From my experience, I would say it is pretty true, because I work with an awful lot of people who just come to me and look for some advice, and then they go off and do their thing, and they don't make it. The traders that make it are the ones that decide how they're going to proceed going forward. How are they going to conquer this thing called trading? And it involves, number one, learning charts in a way that I don't think very many people could teach you, because most people don't even understand it. And number two then is getting yourself to do what you need to do every day, and that's the psychological part of that. Follow-up procedures, one of the most important things. You can't improve if you don't see what you did right or do wrong. If you follow your rules, the only way that all trade outcomes would be the same is if every day were the same, as if every trading day, every stock, every future, but they're not. They're never the same. That means that applying the same standards to trading means that some days you may have nothing to do, and the next day you may have more trades than your account allows you to take. And sure, I think I'm done here in just a second. I know oh, I have 3 minutes. I thought I was past my time. Great, I mentioned this already. For chart reader, trader, investor, it's on the free sub page under the section. And sure, if you could post that again if you're listening to the free sub page, because I'm almost done here. And some people who maybe joined us late would be able to see that then.
Got it.
But if you're there, the Hall of Fame is a good place to start. And this is one of my favorites, because it discusses, from a money management point of view, one of the things traders do wrong so consistently, that if you do this wrong, you're not going to be able to be successful. They start off too big and they never get big enough, meaning share size and risk amounts. Got to start off really small, build confidence, and then there's no limit to how big you should go. Taking 3 times the trades will not make you 3 times the money. Risking 3 times the amount of money will make you 3 times the amount, but you can't do that until you are an accomplished trader to some degree. Biggest issue, few can tell you when they have their setup. What is the setup? It varies for all. 2 traders of equal and excellent chart knowledge may have different setups, different favorite patterns that set up every day. I know a lot of setups, most I don't use. I have a smaller list of favorite setups that I can use. I have a handful of favorites that are my go-to setups. I have 3 or 4 things I love to do. I'm very good at them. I look for them. And if I don't find them, I decide if I want to go to kind of my level 2 setups or if I want to just wait. The quality of a particular setup, remember every setup is different. The math, the market timing, the relative strength and weakness, all that matters. Oh yeah, gosh, I'm gonna run through this real quick. Consistency in thinking. Do you know exactly what you're looking for? Can you say no to a chart objectively and state what it bases on your thought process? Can you look at a losing trade and say it was perfect, but it just didn't work. Most traders can't do these things I have listed here because they don't really know what they're looking for exactly. I'll run these really quick. I have 1 minute. This is a trade from yesterday. I just want to show you the thought process and how I do. This is a trade from yesterday. It's NRG short. You can see the numbers on here. It's entered at 1021. I'll show you the charts. I took 2 targets. So it was split in half. Entry 35.94, stop 36.36. Target 1, target 2, boom, boom, boom. $500 risk, 16.25 profit. Daily chart. This is a gap down, right? What do you do with a gap down like that? Well, I know I cannot short that early in the day. It's what I call the tier 3 gap. I know that I have to wait till 10 o'clock. I know that I may miss the trade if it falls. I don't care. I know it has to rally back and give me a setup. I wasn't that excited about this. I had it on the back burner on the screen. Wasn't looking at it. 15-minute chart doesn't show you much. I'm going to skip it. The 5-minute chart is where things start to shape up. The thing rallies like I wanted it to do, and then it rolls over. That's not an entry. If you're using something called a 5-minute sell setup or a 15-minute sell setup, you're going to lose money. Those are not real professional type of entries. But what happened then on the 5-minute chart is right under there. It's the buy setup failure, as I call it, or you see it better on a 1-minute chart. I'm not a 1-minute chart trader, but I do use it to perfect my entries, etc. There's your actual entry in the chart. And that was an entry I said to the room when it happened that is so compelling, I can't stand the thought of not taking that. I didn't want to take another trade at that moment. I was done. I had to take NRG. It turned out to be the trade of the day. Perfect entry, understanding exactly what it is I need to see when the first gapped, what I needed to see for an entry. Can you do that is the question. That's what you need to be able to do as a trader. Learn what you're doing, start small and build confidence, slowly increase your risk and share size. Trade from confidence, not from fear. Focus on maximizing winners, not minimizing losses. 3-legged stool, I'm done, 2:31. I started 2 minutes late though, so it's not my fault. Any questions if I have time, Sherry, or if not, I will just say I hope you enjoyed this, guys.
Guys, he did get to start late. So do you have any questions? Quick.
I can talk
Great
really
job.
fast.
Look at this. Great job as always, Paul from DW.
I'm gonna leave this slide up till I'm cut off there. That's the 3.
All right. And I did put the link in the chat again. Guys,
Okay.
How many hours did that person say they were on your free stuff page?
The entire week. You know, he said a 6-day week and 8 hours a day. He didn't quite get through everything.
Wow. That's awesome. Guys, Paul comes and joins us every few months, and I know and I hope that he'll come back again. So you can email him at paul@thedisciplinedtrader.
No.
That's somebody else. That's Norman. You need Paul at disciplinedtradingstrategies.com. Sorry.
If I could just
Anyway.
add, before you cut me off, I could just add, thanks for having me, Sherry, number 1. And number 2, when you get there, if you're on the free stuff page, you go to the home page, you'll see 5 seconds time to be a free member. Don't be afraid of being a free member. You just
Cool.
get educational information. We don't sell your email. If you want to unsubscribe, you just unsubscribe. You don't get passed around. Nothing happens to you. It's nothing but good. So be a free member if you want to be, and don't hesitate to email me if you have any questions. I will gladly talk to people. That's what I love doing.
Okay,
See you guys.
good.
Thanks.
I don't see any questions, but I do want you to know that Daniel says outstanding, Paul. And Daniel also says, different Daniel says, thank you, Paul. Great session. Alex says, who are you? I'm pretty sure you know each other, though.
Oh,
And
Alex.
Daniel,
Okay.
Daniel B
I knew
says,
you
just signed up. So thank you so much. And I appreciate it. Hope you have a wonderful Christmas season. And stay tuned. I will be in touch with some questions for you. I'm going to be polling all my speakers so we can make this an even better event in 2023. Thank you. All right. Have a good one. All right, guys. That was Paul Lange. Let me just move back over to me. And I hope you really love that and that you take advantage of checking out his free stuff page. Our next speaker is here. Marina she's going to talk to us about understanding market trends and how to trade breakouts in Eminis. It's Marina Villatoro of the Trader Chick, of course. And I'm so glad you're here with us.
Hi, thank you. I'm happy to be back.
I always have to ask, where in the world are you?
Today I am in Guatemala.
All right.
For the moment.
And the plans are moving along for the move to Spain. I think it was. Nice.
Kind of. Yes, they're on their way.
Well, it'll happen when it's supposed to happen, right?
Exactly.
All right, so
Exactly.
let me do my housekeeping and then I'll give it away. I
Okay.
wanted to let you guys know that, and I just said, it's Marina Villatoro of the Trader Chick. She specializes in helping people day trade with confidence. She's been trading financial markets for years, using trial and error to gain insight. When Marina began trading E-mini futures over 8 years ago, she realized that no one was teaching the most important part of trading, which is the basics. So, you know, reading and understanding the market language. If you're actually listening, it does speak loud and clear, and being able to truly understand it will take your trading to a whole new level. So take it away, Marina, and thanks so much for joining us.
Sure. Can you give me access to
Maybe
share my
maybe I would
screen, please?
let you share your screen,
Yeah.
and you like to I
Awesome.
know you like to do the organizer too, so just a minute. There you go.
Okay.
All right. Sorry about that.
Yeah. Hang on just a second. All right. You guys should be able to see my screen now, right? Hopefully.
Is your screen like not super bright? Oh, I think it's coming up now.
Are you able to
Yeah,
see it?
it's
It
good.
should
I
have
can
my
see the
logo on.
Trader Chick Simplifying Day Trader.
Okay, cool.
Trading.
Well, hi, everybody. Thank you so much for having me, Sherry, again. And I'm so happy to be here again with you guys. And thanks for joining. I mean, I know that it's in the middle of the week. It could be a little bit difficult sometimes with work and just crazy stuff I'm sure everybody goes through. So I'm appreciative of you guys all being here right now. All right, so my goal is to obviously teach you something really important. However, I always find that the more interactive people are, the more questions you ask, the better it is for yourselves, because I always say that day trading, it's not a spectator sport. So the more interactive you are, the more you will get out of this. So please, guys, write me your questions. There are no bad questions. And sometimes a question that you ask, other people might not have realized that they wanted to ask and be like, oh, yeah, I want to know this question as well. I want to know the answer to this question as well. So definitely please ask away. Okay. Like, I want you guys to ask me any question that pops up. I will get to every one of your questions. Okay, guys? So please ask and I will answer. Now, this is me, Marina, the Trader Chick. And today I have something really cool that I want to talk with you guys about. But you got to go with it, all right? Open up your minds, because trading is a wholesome thing. So let's have some fun. Who here likes Cirque du Soleil? If you guys haven't actually been to a Cirque du Soleil show or whatnot, actually you need to get out and go and check it out. But I'm sure you guys have heard about it or whatnot. So who here is a Cirque du Soleil fan? Yes, there are a few right here I'm seeing. Well, I am a diehard over-the-top lover of Cirque du Soleil. And before COVID, we used to go to see tons of them. And then I don't know if you guys heard, but during COVID, they actually went bankrupt. And now it looks like they're back at it, which is unbelievable. This is just Cirque du Soleil. It's not a show, it's an experience, right? Like going there, you are in a full-on experience. And one time I was sitting and watching and just complete awe. And then I started to think to myself, these performers, they are actually just ordinary humans that are doing absolutely extraordinary things, right? So what does it take an ordinary person to become extraordinary? And it's the same thing, by the way, and this is what it's all about. Becoming a successful day trader, right? A lot of times we think, oh, we're born with it, or that person is born with it, and all this other stuff, blah, blah, blah. But the reality is, great performers, they're ordinary people that have done extraordinary things. Great traders who we, aspire to be, have done extraordinary things. How? This is the breakdown. And every single one of us here could do the same. Number one, commitment, right? Because it's so easy to focus on the Cirque du Soleil performer and be like, oh, for sure, they're committed. They've been doing years and years of training to perfect their mastery, right? Their focus. Have you guys noticed their focus? Like when you're on a high wire with bikes and acrobats, are you going to pick up your phone and start scrolling through it? Or are you going to answer your husband or your wife if they're talking to you? Are you going to, yell at your kid? No, yet we do that when we are trading with large sums of money, right? And the commitment, a lot of people just jump into the market because there's no barrier to entry and they think that they're going to become great traders. Absolutely not. Great traders, they perfect their mastery with training, their intense focus. I have found mindfulness when I became a trader. I am completely in the moment watching what's going on. Cirque du Soleil performers, they're disciplined, right? They are so disciplined. You're not born with discipline. You acquire discipline by learning discipline. They show up every day for training. They show up every day to do their craft. If you want to be a good professional trader, you got to show up. You got to practice. You got to put in that time to understand what's going on. Just because you have $100,000 doesn't mean that you can succeed as becoming as a good, strong trader, right? How about trust? Trust. Do you ever think these Cirque du Soleil performers who are with partners, like that image that I showed you, you know, the woman doing an acrobatic move with two guys on a bike on a high wire, do you think she doesn't trust them? She has such trust in them. She literally puts her entire life into them, right? So it's amazing to me the amount of people who want to trade, who get a charting platform, have absolutely no idea how to use their equipment at all, and are putting in their live money, basically getting on a high wire, putting in their live money and thinking that they're going to succeed, and they don't even know how to get in or how to get out. They don't trust their equipment, which is our software, okay? And confidence. Where does confidence come from? If you're not, if you're not training and you're constantly losing, are you going to have confidence in your trading? No. If you're constantly, messing up with your platforms because you actually didn't spend a few minutes or the few hours to learn it and you're constantly losing, are you going to have confidence? No. This is what confidence is. It's the practice. It's the understanding. It's being able to get on that higher wire because you have put in the time. This woman did not get on this high wire with these guys deciding the night before that she wants to do this, right? Like there was time and effort put into it. Why is it that there's no barrier to entry when it comes to trading? People who have a lot of money or even some money think that they can become multimillionaires or millionaires overnight just because they decided to put in their money into the market. Why would the market do anything for them if they haven't put any of the time in? Okay, that is literally what day traders and Cirque du Soleil performers, the directors, those careers have in common. It's a lot more than we think because 5% of traders who we see as successful traders are making it happen. Why? Because they've done the work, and that's why 95% fail. Okay, do you guys want to be in that 95% or do you want to be in the 5%? This is when you have to see, what am I willing to do for this? Okay, that is the difference with successful traders and not successful traders. So what can we do differently than the 95%? Look, there's so much that we could do. But today I really want to focus on one of the most important things that will take your trading to that next level. Today's presentation, we're going to be talking about trends. They are like tight ropes, okay? We're going to be learning about trends, how to spot those trends, how to work with those trends. And that is really going to be important. Now, I have created an entire worksheet for you that goes along with this presentation. You could go into it right this minute. Go here, makingofadaytrader.com. Makingofadaytrader.com. You'll get the free presentation that goes with, the free worksheet that goes with this presentation. Now, just a quick, who am I? Like Sherry was asking, where am I today? I am Marina, the Trader Chick. I'm actually an expat. I live in Antigua, Guatemala, and we are planning on moving to Spain, hopefully within the month, like to relocate altogether to Spain. Before I became a day trader, I was a fitness instructor and a travel writer. I mainly bring this up because a lot of people think that they need to come from a math background or financial background. None of those are true. And I'm also trilingual. And the main reason I bring this up is because when Sherry mentioned in the intro that the market speaks to us, it has this language. And I think because I am trilingual and I learned Spanish in my late 20s, I recognize there's a process. And that is the same thing for the market. James, it's makingofadaytrader.com. Here, I'll put it in right here. Makingofadaytrader.com. And you could go, and you could get the free worksheet right there. Okay, guys, and the cool thing about trading, you could do it from anywhere. Before COVID happened, I used to do a lot of in-face person, I guess summits, presentations, and now I just like to do them virtually mainly. All right, guys, again, go here, makingofadaytrader.com, makingofadaytrader.com, and you can have the free worksheet right now. All right, ready to jump in? All right, guys, every performer starts with learning the basics. That's how they get their confidence. They master it because they began with the basics. So what I always say, another way for you to understand the basics, what a lot of people do in day trading is that they're putting in windows. They're good putting in live trades. They're putting in windows when they don't even have a wall built in. They don't even have the understanding, the foundation. And that's why their windows keep on crashing, right? Those are the basics. You have to start with the basics. This guy is not going to be doing incredible tricks 60 feet off the ground with these ribbons before he started to do them maybe half a foot off the ground, right? Because he has to learn from the beginning. So what are the basics of trading? Normally there are 4 basics of trading, but today we're really going to focus on the main one because everything pretty much is from these trends. Okay, tight rope walkers. Think of them, tight rope walkers, because trends are very similar to that. Do you really think they started 60 feet off the ground being a tight rope walker? No, I actually have some friends that really enjoy doing that, and my kids love slacklining. They start about 6 inches off the ground. Some of them even start 1 inch off the ground. So they begin from the very, very small steps and they grow to the big steps, to this. These guys did not do this because they decided last night they're going to get on there and do this, right? They put in that time. Now it's ready. It's your time to jump on that tightrope and to be able to dominate it. So let's begin. Look, we all know that there are 3 types of trends. There's 3 trends. We have the upward trend, the downward trend, and the sideways trend, right? The sideways trend is literally where we end up losing most of our money. This is the exhaustion pattern, the indecision area, consolidation, the chop, the transition. I don't care what you want to call it. This is an area I call is the trader's worst enemy. And understanding it and finding out about it and staying out of it will save you a lot of money. Now, what is an upward trend? It's literally where each pivot is higher than the next one, right? This is where you're going in for the buy. You're going long. What does that mean? You're buying at a low price point, exiting at a higher price point, and taking the money in between. What is a downward trend? It is where you are shorting the market, when you are selling. What does that mean? Layman's terms, super easy. You get in at a higher price point, get out at a lower price point, and take that money in between. Okay, so now I want to really focus on these consolidation areas, this channeling market, the sideways market, which is literally the trader's worst enemy. This is where we end up losing the majority of our money. Why? Because it is complete indecision. There's absolutely no movement, yet aspiring traders or wannabe traders believe that they have to be in and out constantly in the market, which is totally untrue. And the other thing is that they create stories that aren't true, especially when it comes to consolidation markets. For example, if a trend is your friend kind of a trader is watching this market and that they're seeing that the market's been going up all day and all of a sudden it starts to flatline, right? What are they going to do? In their head, they're like, you know what? The market's been going up all day. I'm going long. Then you have the other kind of a trader, the contrarian trader, right? They're looking at the same market and they're like, you know what? The market's been going up all day. It's got to correct. I'm going to short it. Here's the reality, guys. The market is literally talking to you. It is telling you, I am going flatline. I am in indecision area right now. You, as the pro trader, need to sit out and wait until I tell you what my next step is going to be. All right, that's the important thing. And it does this to us often. And once you get confirmation when it moves out of that area, where it either breaks out or transitions, that's when you enter a trade. Okay, now, how do we recognize and define these areas? And that's exactly what they are, areas. The market respects areas, and so we, as the trader, the individual retail trader, need to as well. What are the areas? Support and resistance areas. What is the support area? It is when the market is going down and all of a sudden it starts to hit over and over and over and over again at the bottom. It is the floor of the market. It can literally stop a market, or it could totally change the direction of the market, or it could just be there until it breaks through. But we have to understand these areas. This is how you define them. Now, what is a resistance area? What is a resistance area? It is the ceiling. So you might have a really strong upward trend, but all of a sudden it's hitting over and over and over again. You have to draw these areas out, because we don't do mental areas, because mental areas don't work in anything, right? It's literally like putting in a mental stop. What is a mental stop? It's the same stupidity as a mental seatbelt on your baby and think you're going to be, saving them if you have a car crash. You need to draw this out, guys. You need to put the stuff there so that you can see it. When your money is in the real market, you can look to the left and see and be like, okay, this is a resistance area. I'm in this because it transitioned, or I'm in this because it broke through. This is the reason why this is such a high probability trade. You need to be able to define those areas. Now, how do you actually start to notice the areas beginning? It's understandable that you lose in the very beginning, but you cannot continue, right? So how do you recognize when it's actually happening? And that is the reversal areas and divergences. To me, this is now the trader's map to shift in direction and trend, and they are my favorite. What are reversal patterns? Double tops, triple tops, double bottoms, triple bottoms, head and shoulders, right? This is the market literally telling you, stop. I am becoming weak, and it is a very high probability that I will reverse. But don't get into a reversal trade until I give you more notice. And when you see the reversal patterns with divergence, as you can see right here, meaning it's totally straight here, the price action, I personally use the MACDs, and my MACDs are showing me that there is divergence. What is that telling me? It's showing me that the market is slowing down. It might change. I don't want to be in a change until I know for sure. But in the meantime, I know for sure that the market is not moving, not going to be really continuing to move the same as it was before. And when it happens like that, I'm holding on to my money, because the probability of me winning is becoming lower and lower. So I'm staying out until I see a good, strong probability and a lot more confirmation. Okay, now, breakouts. We all know that breakouts are probably the highest probability trades out there. So you need to understand how to spot the breakout. But if you're not drawing in your resistance areas, if you're not drawing in your support areas, you're going to miss out on these super profitable, super powerful trades, right? What exactly is a breakout trade? Look, it's literally when the market is moving in one direction and all of a sudden it flatlines. It becomes super uncertain. Is it going to go up? Is it going to go down? Oh my gosh, I'm not sure where it's going to go, right? And then finally it breaks out and boom, it explodes in the same direction. That is a breakout trade, when it continues in that same direction. So let's put it all together. Again, guys, making of a day trader.com. Go here to get your cheat sheet for the trading. Making of a day trader.com. Go and get it right here, because you'll be able to watch all of the replay and use the cheat sheet that I personally actually use for my own trading. All right, so let's talk a little bit more about the breakout. Okay, look, if you guys don't draw in this resistance area, how are you going to know when it actually breaks out? So I personally use MACDs as well. As you can see right here, it was flat. This dashed line, this is zero. That's when the market has absolutely no strength. And then boom, it finally broke out and it's giving me massive movement, no divergence. That's the breakout trade. Okay, when you're moving in one direction, no, I don't know where I'm going. I'm not sure what's happening. Boom, breaks out. All right, this is that breakout. This is the setup. Now, I personally only use two indicators. I use my EMA lines and I use the MACDs. Why do I use the MACDs? MACDs to me are the least lagging indicator out there. I know there's a lot of indicators out there. The majority of them are quite lagging. I found that the MACDs is probably the least lagging of all. And I use my EMA lines for a place of entry. I tell the market where I want to enter. And what does that mean? It literally means that I don't go in market entry, because when you put in a market entry as a trade, it shows the market that you really don't know what you're doing. And then you get penalized with slippage, right? Slippage is when the market takes about 20 to 25% of your money from the start, because it sees that you don't really know what you're doing. So I use my EMA lines as a place to take my trades from. It's literally like if you're an archer, if you've ever seen archery, you know, they don't walk around aimlessly on a field just shooting arrows, which is market entries. They have a very specific place they stand before they shoot the arrow. And that's what I do. I put in limit orders. Now, I want to do a really quick bonus tip from the Cirque du Soleil performers. They dominate one area only. What does that mean? This woman is not about to start doing motorcycle acts, right? Yet it's amazing to me the amount of people that want to trade, that want to do a million different kinds of instruments and financial markets, when if you focus on one instrument, master it. It could be either it could be equities, it could be options, it could be forex, it could be futures, but it's one specific thing. Okay, that is so important. Dominate that one and you guys will kill it. All right, so remember, makingofaDaytrader.com. Go here, makingofaDaytrader.com. All right, guys, here's the thing. We have absolutely everything that we need to take action, right? We have everything we need to take action. The real question is, for instance, we have YouTubers, we have podcasts, we have these amazing presentations, we have different kinds of books, but at the end of the day, how do you know that you're doing it right? How do you know that what that person, that YouTuber said to do, and that you're actually doing what they are recommending? Who is there to guide you? How do you know if that's really what is happening and how you're doing it? How do you know you're doing it right? Who is there to help guide you through this, right? Because all of this is great. But the real question that you're probably asking is, how do I really, really get started? And this isn't from beginners only. Seasoned traders who have been trading for ages that are still losing money ask me all the time, how can I turn this around? How can I be profitable consistently? And to me, I have personally recognized that the biggest issue is lacking understanding of the basics, right? I mean, that was something that a lot of us overlook. Look, I am in a really unique position right now. My 18-year-old son just learned how to drive a car. When we first sat down to teach him how to drive a car, me and my husband have been driving for over 30 years. So here we get in the car. We already been, we forget that we also went through the process of learning. And we're like, okay, buckle up, put your gear into first gear, make sure the clutch is down, put your foot on the brake. And then as you start to release the clutch, that's when you change gears. He's like, wait, gear, clutch, brake. He's like, well, what are you talking about? I don't understand. That is a strategy, right? Those are the basics of driving. We know, we learned first where the accelerator is, where the steering wheel is. Those are all part of the strategy, right? But those are the basics. And if you don't ever learn the basics, how are you going to be able to drive a car? Imagine, pretend, like clean your mind and imagine a completely beginner's mind, right? A beginner's mind. Imagine you've never seen a car, you've never entered a car, and you get into this car, this vehicle, and the driver's like, all right, put on a seatbelt, it's gonna save your life. And you're in the car, you're like, oh my goodness, I have no idea what is a seatbelt. I have to find it because it's gonna save my life. But if you were never taught that, how can you use it, right? And I always found that all these academies and all of these different schools and chat rooms and all that, they overlook the basics. It's as if they were born with it, and we're not. None of us are born with anything. We learn everything, right? And that's exactly what happened to me. Like, I had spent over $20,000 on trainings, on mentorships, on academies, on chat rooms, and every time I asked about the basics, I was completely overlooked, ignored, or treated like I'm just supposed to know this information. I kind of felt like, you know, like if you want to learn an instrument, let's say your child wants to learn the flute, and they arrive to an academy, and instead of being put into the class where you learn how to hold the flute, how to blow into the flute, your child is literally thrown into the symphonic pit and is expected to keep up with these professional musicians. That is the majority of what's going on. People are overlooking the absolute basics, the most important thing of all. And that's why I struggled for years until I ended up losing almost $4,000 in 5 minutes. I was in some live chat room and they were saying, oh my goodness, this is a great trade. And they were getting in. And I was like, okay, I have to get in, even though I didn't understand why I got in. And, you know, all this emotion and chasing the trades. And I ended up losing all this money. And finally, after a while, I just quit. I just quit because it was so frustrating to me. But here's the thing, guys. And I know that every single person in this room feels the same way. We are all bit by the trading bug. We're bit by the trading bug and it never stops itching. And do you know why? Do you know why that is? Because deep down inside, we know that we could do this. We know that we could do this. I knew deep down inside that I could do this. Like I could do this. And that's when I decided to come back. I stripped my chart. I had 3 monitors and a chart and 10 indicators. I first of all donated 2 monitors, high definition monitors, to the garbage man. I literally just put them outside. They were less than a year old. And I stripped my entire charts to bare naked chart, a bare naked price action, and started to just focus on the basics. And after a while, after putting in all the time, I then slowly put in my indicators. Now I'm down to only 2 indicators, because the thing is, a lot of people are like, well, this guru said to use this indicator and this person said to use this indicator. And I'm like, yeah, it's all great, but are those indicators working for you? I struggled for years with indicators that were recommended to me by all these different gurus. The Bollinger Bands, the Kettler Bands, Fibonacci's. Just because they work for someone doesn't mean that they work for me. And to be honest with you, they gave me massive stress. They never worked well for me. And I was able to just put in each indicator one at a time to see which one worked best for me. And that's how I came with 2. And after years, and now I teach it, one of my students comes up to me. They're like, you know, Marina, your teaching style is very similar to Coach John Wooden. I'm like, who's Coach John Wooden? I've never even heard of this guy. So of course I went online and I started to look him up. And I mean, this guy is legendary. Like, he is a legendary basketball coach. And then he went on to coach other stuff as well. But his entire philosophy and coaching strategy was, when in doubt, get back to the basics. And I mean, this guy, we're not like joking around, like he won 10 NCAAs, 88 championships. I mean, this guy coached the stars of the stars in basketball, right? However, every season in the beginning, he would get back to the basics. How to tie your shoe, how to roll up your sock, how to dribble your ball. Why? Because it does not matter what you think you know and how great your algorithms and all of this is and your chart setups. Because if these guys didn't tie their shoe properly and they were on the court and their shoe fell off and they sprained their ankle or broke their ankle or whatever, guess what? They're sitting out on the bleachers for the rest of the season. Doesn't matter what they know, because you have to start with the basics. Remember this always. Remember, you cannot put in your windows if you don't have walls built to hold them in. This is what is holding them in. Now, for you guys, for you only, for my participants, for the participants that are here right now, I truly, truly appreciate you guys taking the time. I have a very special offer for you guys. My introductory course, Bootcamp for Day Trading. Bootcamp for Day Trading. You can do this on any apparatus, tablets, phones, desktops, laptops, and you get it one-time fee, $97. One time. And you can go right here, go into your URL, go into your browser and put in bootcampfordaytrading.com. Bootcampfordaytrading.com. Now, what can you guys get for $97 today that is going to bring you the same return on investment? Do you like to play golf? Let me tell you something. I live in Guatemala. Guatemala, which is considered a third world nation. And if you go to a golf course here, it's not even $97 for one person to play golf. So I can't even imagine the higher courts in other areas, in golf courses in other areas. You want to take out your friends to lunch or dinner? Even in Guatemala, because me and my husband do enjoy really good quality food, it's $100 per person now. So it's usually $250 for us to go out to have a good meal with wine. All right, guys? You can't buy anything really substantial for $97 anymore. That is the return on investment of this. So let me break it down for you. Again, you can go and follow everything here. Bootcampfordaytrading.com. Bootcampfordaytrading.com, and you can follow exactly what I'm about to show you. What do you guys get in bootcampfordaytrading.com? First of all, simplifying day trading package, right? And like I mentioned earlier, trusting your equipment. I cannot even tell you the amount of people that are losing money because they don't understand how to set up their platform without even starting to trade yet. So I have a 30-minute platform setup tutorial. It does not matter which platform. I will help you get that started so that you are up and running and trading, because that's what it's about. It's not about the setting up of your platform. You don't want to lose all your time on that. Then we really dive deep into the market anatomy process, right? Dissecting those markets and the trends. Because once you really understand that, you can take all sorts of trends, all sorts of trades, understanding the reversal patterns, understanding divergences, and these are free. They can be used on any platform, and that's the beauty of it. And they are so clear and so indicative, okay? Then we talk about the defense zones, right? The reversal patterns, the area of support, resistance, and I cannot even tell you how important and how much I absolutely love divergences. It has changed my entire trading, and it could be done on any platform with any chart with any instrument, and that's the beauty of it. And how to spot powerful breakout trades, so that we can avoid the fake out breakouts, and you can't avoid them. Fake out breakouts can be pretty scary, okay? So we could understand how to do those breakouts, and you get unlimited access to the curriculum. All this is valued at $1,600. All right, guys, this is what you get. The trader's workspace. You get your platform fully set up, dissecting those trends, understanding the movements, understanding and respecting the areas, working with the areas, the breakout mastery, the power of the breakout. And here's what some of my students say, because honestly, guys, this really works, the basics, and it's fun, and it makes it so much more fun. I have students from all over the world, because the beauty of trading is that you can do it anywhere in the world. So this is Michelle. She just finished the boot camp, and she is best money I ever spent. And Derek, you are the only mentor that truly works with you, that really does and helps so much. Adrian, I am enjoying your boot camp so much and learning every day. But I want to share something really important with you. Do you remember what I asked you? How do you know you're doing it right? Who is there for you to ask? Hey, is this going, is this the correct resistance area? Is this the correct support area? How do I spot this reversal pattern? Who is your accountability partner? I am. In this, for that one-time price of $97, I am including a mentorship coaching with you. 1 month, one-on-one, unlimited mentoring and coaching. I mean, this alone is priceless, guys, because a mentor can literally take you to that next step. Look at all the athletes. Look at the CEOs. Look at the actors. They all work with coaches and mentors. You could really benefit from it too. And I have the best for last. I run a weekly live trade chat room. Okay, and it's me. So it's not any moderator, not any administrator, it's me, where we are live, taking live trades, going over and implementing everything that you're learning. That is included in that price. You get 1 free month membership. All this is valued as $2,600, but because only for you guys and nobody else, this is only a special price for the live participants, $97. So go here right now, bootcampfordaytrading.com, bootcampfordaytrading.com. Here's what you guys get for that $97, bootcampfordaytrading.com. First of all, everything you get in the course, and it's a lifetime curriculum access. 30 days one-on-one mentorship with me, one-on-one feedback. You guys could ask me all the questions, sharing charts, you name it. And 30 days live chat room membership with me, implementing, taking the trades, showing you how to do it, and you get to ask me all those questions as well. Bootcamp for daytrading.com. Guys, here's the reality. I know for a fact that this alone is worth less than the price of the one trade that you normally try to take per day, right? And chances are, without the right education, you might not be succeeding always, right? $97. The cost of this course alone is 10x on your return of investment because of everything that we go through, because you're working with me. All right, so you can go out and take your friends out to 100 of these types of dinners, all of that. But here's the real important thing. Because of the mentorship program, I'm only able to take 25 people. Otherwise, I just cannot give the right amount of attention and commitment to your trading. So they go really fast. So go here right now, guys. Bootcamp for daytrading.com. Bootcamp for daytrading.com. And you could go along and see, this is the order form right here. So let me show you. All right. Go in bootcamp for daytrading.com, put that in, and this is where it's going to be bringing you to. My internet is a little bit slow right now. I don't know why. Okay, here we go. So bootcamp for daytrading.com, and as you can see, you one-time payment, $97. If you guys want to do a payment plan, I do have for 2 times for $59, but you get everything immediately. Okay, you get everything immediately. So go here, bootcamp for daytrading.com, and you can go along, find everything. It's all right there, structured out for you guys. Bootcamp for daytrading.com. This is the order form, and go ahead and just try it out. So let's go here together. And guys, I'm here for you. Like, I'm totally here to help you to learn. It's time to just take it to that next level. And that's why I made the course so affordable. And I also know the importance of working with somebody to ask that question, to ask those questions, to show the charts, to be able to help, and to, if you're in the live market, to really go to do those things together. And that's what I am here for. Okay, guys? So please let me know. Bootcamp for daytrading.com. Bootcamp for daytrading.com.
I put it in the chat too a few times.
Okay, wonderful. Bootcamp for daytrading.com. All right, guys, if you have any other questions, I'm here. If not, thank you so very much for your time and for just being here. I really, really appreciate it. And Sherry, thank you again. Thanks so much for everything.
Oh,
and I know that there was a little
you.
bit of complication with my email. Sorry about that.
Hey, if it's smooth, what would we do?
Yeah, for sure, right? I appreciate
Guys,
it. And
if you
it's
have any
always a joy.
questions, thank you. Thank you so much. Guys, you have like 2 or 3 minutes. If you have questions for Marina, please ask them now. And Marina, do they need to go to your website to email you or to chat with you, or do you have an email address you'd like them to have?
You can just go to thetraderchick@gmail.com.
Okay. The Trader Chick at gmail.com.
Yeah.
All right, I just put that in the chat. And Mike, there is going to be a replay. We posted at tradersexclusive.com/archived_webinars/ and it's also on YouTube, but that's the best place to find it is on our website. Thank you so much. Anybody got questions? Got questions? And we did put up makingofadaytrader.com and bootcampfordaytrading.com. There you go. Are these techniques applicable to swing trading as well? Asks Bob.
Yes, absolutely. Absolutely. Because we learn about how to read the charts. So swing trading is literally just a different time frame. It's still the same strategy to be applied, but it's, yeah. So Zaki, you're saying that you cannot, get to,
yeah, it's a little slow loading today. I went to it myself.
Why?
We're all probably going to it right at the same time.
Okay, so here's the actual link. I just put it in here.
You want me to do that?
Yeah,
You
can
do it.
you,
Yeah,
can
I
you,
got it right here. Let me see.
okay. So
I got
because
it right
it
here.
redirects you to the place where you could get it.
Yeah. All right, I'm putting it in the chat to everyone.
Okay,
And
great.
that
Yeah,
takes you right to that page.
it should take you there pretty quick.
Yeah.
All right, well, let me know if
That
there's
takes
any
about
other
20
questions.
seconds. Okay.
What's that?
It did pop up really quickly when I just went straight to that link. So
That's
use the
interesting.
last link that I put in there, guys. And when does the 30-day boot camp start, says Mike?
So it's completely at your, it's at self-paced. So it's whenever you are ready because it's completely online. The chat room runs weekly, so you could just join in when you are ready to join.
And then it's a rolling 30 days.
Yeah.
Okay, cool. Awesome. So no matter when they start, they get 4 weeks in the chat room.
Yes, exactly. Yeah.
I don't think you
Exactly.
guys could be that. So he's saying I could start in January.
Absolutely. So a lot of people take me up on
Definitely
this
buy it now.
deal
Mhm.
to start after the holidays. But yeah, absolutely. You start when you are ready, but you get access to the curriculum, which is for life.
Sweet. Thank you so much.
Okay, thank you so
Awesome.
much, everybody, and have a great rest of your week. I look forward to working with you guys. And thanks, Sherry, and happy holidays. Happy holidays,
Yes.
happy New
Merry
Year. I
Christmas.
can't believe we're in
Thank you.
December.
I know I can't.
How did
Thank
that
goodness,
happen?
because 2022 was not my favorite year, I don't think.
It just went so fast, I'm not really even sure I got it.
It didn't go fast at my house.
Oh, well, I hope it gets better.
It's getting better. All right. Well, thank you so much. And then, guys, just don't forget, I did post her email address. You can get in touch later, but get in on that deal. And then you can start in January. That could be your New Year's resolution, right?
For sure, that would be a great one.
Yeah. All right, lady, you take it easy. And best
Okay.
wishes for
Thank
all
you.
of your plans and travels.
Thank you. Bye.
Bye now. All right, folks, that was Marina, the Trader Chick Villatoro. And you really do need to go to her site and check out her offer. You will be getting email from all of us later so that you'll get the replay email. You'll get a follow-up so that in case you missed the links or anything, your speakers will probably be mailing you on Friday just to give you an opportunity to take advantage of what they presented for you today because, you know, they're doing a free presentation here. So it's reasonable that they would give you an offer. And I think it's so wonderful. The offers that our speakers bring are just the best. So I want to now, we'll do a little more. We have our final speaker waiting in the wings and his lovely assistant, Regan. And he is Mr. Ron Haydt. Ron, make sure you tell me if that's the right way to say your last name when we get talking. But he is with Financhill. I think that's a cool name. And he's going to talk to us about see the top 10 stocks set to soar and crash next. Whoa. Ron is the president of Financhill. Ron started his trading career in 2000. He's a stock and options trader. So you're learning from someone who practices what they preach. He's taught tens of thousands of traders from all over the world, and he loves to keep it simple, use proper risk management, and improve the trader's overall results. So hello, Ron, and hello, Regan. I'm going to go ahead and change some things here. Are you guys, yeah, I see your mic is on, Ron. Did I say your last name right?
You did. Very well done. It's so funny if I
Oh, wait a second. Hold on. I just changed you
getting
to
switched.
organizer. Okay, say that again. Sorry about that.
No, that's okay. Happy Wednesday. I said
Happy Wednesday.
when I check into a hotel, they try to be polite and you can almost see them pause and they either
Mhm.
butcher it or they'll say Mr. Ron because no one wants to take that shot at the last name. I'm like, it's Haydt. It's the way you don't want to say it.
I would have said Haydt, right? I would have said it
Yeah.
I would have added that Y in there, but then I thought, no, let's just take it easy. I have a weird last name. And actually, somebody in our family's past was named Newton and they just removed the N. So my maiden name is EWTON. So I've been having a butchered last name my whole entire life. So I feel your pain, and just don't call me late for dinner, right?
Ditto. And I am not. All right.
All right, now listen, I've made you organizer. Oh, I need to make you the presenter so you can share your screen. There you go.
Yeah.
And Regan has view of the questions and whatnot.
Yeah, Reagan will.
Reagan,
She'll
sorry,
be.
Reagan.
Oh, it's okay. Uh, she's okay. Perfect. Now you should see my screen. Is that correct?
Yes, I can.
Perfect. Yeah, so Reagan, she'll help out. She'll answer some questions and such. But I can read the chat box. I can talk and stuff at the same time. So one of the biggest things is if you guys do have questions while I'm going through this presentation, please feel free to ask. I can do both at the same time. As long as it's on topic, I'm going to hit it right as we do it. If it's not, I'm just going to wait. And then at the end, I'll make sure there's time for Q&A. And you guys can ask me anything you want. So feel free
By the
to.
way, I don't know if anyone else can see this besides the organizers, but T. Petty just said Ron Haydt, the modern Nostradamus of stocks.
Oh. Hey, Tom. Nice to see you. Tom's always so kind. All right. Am I good to go?
Yes, sir. Take it away. And thanks for being with us.
Oh, yeah. Thanks. Thanks for inviting me, Sherry. It's nice to be here. All right, peeps. How are you guys doing? My name is Ron Haydt. It's my first time here. So I'll be able to see your questions and so forth. And like I said, I'll answer them as we go through it. One of the things is this is live. We're not going to be doing a PowerPoint deck. So we're going to look at stocks that are set to move based off of historical data. I'm going to get into that more in a little bit. So it's going to be on the fly. I'm going to talk about the top 10 stocks set to soar and crash in case this market does roll over. 4 down days does not constitute a rollover, even though fear sells, right, on the headlines. So it's going to be very informative. It's going to be very fun. And like I said, live. Now, whenever you see me in a presentation, you're always going to hear this disclaimer, and it's really important. Everything is for educational purposes only. It is not advice to buy or sell anything. I am not a licensed financial advisor. I cannot tell you what to do. Everything is in a paper trading account. I get asked that a lot. Well, why is it in a paper trading account? Because I can't tell you what to do. And I want you to trust me. Go throw it in a paper account, a virtual account. They're free at any broker. And then you write these things down. And then you come back to me and say, holy cow, I was in that webinar and he gave away 10 trading ideas and 8 of them won. I'm not shocked at all because I'm going to get into it. I don't want to let the cat out of the bag. But when we're looking at proven track records and we know exactly who gets pushed and when, and if they have those 80, 90, 100% track records, if history plays out, I would expect the same thing. Now, I can't guarantee you future performance because nobody can. My point is put it in a paper account and then prepare to be blown away. All right, so next, if I say you do this, you do that, we are going to do this. It's in a paper account. Are we clear? All right, now, number one question I like to start out by asking is this. What's the number one challenge we face walking into any trading day? And I would say it's probably something like this. We're going to have some software. Maybe you have your own due diligence that you do, and you're going to narrow it down. Maybe it's you or it's with your trading buddies, and you're going to narrow it down to 1, 2, maybe 3 stocks. And then you try to say, eeny, meeny, miny, mo, which one's going to go? And you hope all that hard work that maybe you did on the weekend or at night away from your family, or you could have been doing something else, it's going to pay off. But how do you know? Do you really know? Or do you just have a hopeful feeling that that might be the right stock? So the point of this presentation, and I'm going to be going very fast to try to stick to the timeline, because I need to have you out of here by the top of the hour, is within 2 clicks of a mouse, we're going to solve that challenge. You will no longer wonder which stocks are set to soar for the next 2 weeks or crash for the next 2 weeks, the next 3, 4, 5, 6, whatever number you want. So whether you trade stocks, options, or spreads, I'm going to have you covered. You ready to rock and roll? This is all we do. We come into Financial. We're going to log in the upper right-hand corner. That's it. You're now going to slide over here to the left, and you're going to click Seasonality, and you're going to click Screen. And literally, the webinar is over. Let's go get some beer and wings. This is it. From a bullish perspective, these are the top stocks for the weeks ahead, period. No ifs, ands, whats, or buts. Why? Because all it is data. What does that mean? So we built Financhill back in 2016, and we released it in the fall of 2016. We spent a crap load of money, more than, for dear God, more than we ever thought we would, building this software out. We buy our data from Morningstar and the CBOE. We will conduct 1 billion with a B calculations every single night with all the data that comes in. And what you see on your screen in those 2 clicks of a mouse is what you're looking at. So when you look at this column and those columns right there, it's 1 4-letter word. I like to say that data will set you free. It's just data. If you're a scientist, if you're an engineer, if you're someone who just likes facts, it's got your name written all over it. I am not telling you that HCA is a great trading idea. I'm not telling you, quote, trust me on this. Okay, all I'm doing is I'm sort of your guide on this little journey. I'm just reading the screen. If I get run over by a reindeer this holiday season, you will all be fine because you have access to the software. All it is number crunching. Those 5 columns in blue, I cannot stress it enough. It's just data. No, there's no buts. I love questions and I want you to ask them, truly. But those 5 columns, it's just facts. Like it or not, it is just the data. So if HCA has an average move of 7.12%, what does that even mean? With a 90% historical percent of increase. Okay, this right here, I was talking to my business partner. I said, I think we should rename that column. It's sort of funny. I said, because when I'm doing open houses from time to time, I said, it's actually called the track record. So I'm going to write it. It's the track record. So really important. We have taken every year we can get data on. There is no lipstick on a pig here. We are not carving out and only going back 3 years or 5 years or 8 years or only years that end in an even number and not an odd number. No. This is only data. So that means basically 9 out of 10 years, it has won every year it was publicly traded. Now I'm going to show you some stocks that are traded 8 years, 7 years, 17, 27, 37, 47. We're going to do it all. It does not matter. This one, 9 out of 10 years it wins. And the average move, 7%. First thing, because as long as you're not new to trading, okay, you've been around the block, you see a lot of trading systems. And you say, okay, so you tell me this track record is so good, 90% is really good, but that one time it loses. Does that kill the winners? Because you can win 9 out of 10, you know the story, you can win 99 out of 100, but if the one loser kills you, what's the point? The loser's in this data. So that way you can feel confident saying, wait a minute, let's just pretend the stock was traded just 10 years, right? It's a 90% winner. So it won 9 years, lost 1 year, and it was still a 7% gain. The answer is yes. You are instantly armed with fact-based information. And I like to say this as well, that may sound a little hokey or a little funny, but how many times have we wanted to ask the stock what it was about to do before it did it? Now, I can't guarantee future performance, okay? We know this. We've talked about it already. But seriously, it's like, hey, stock, if I buy you right now, are you typically a good performer for the weeks ahead or a bad? That almost sounds ridiculous to even say out loud, but that's what you're seeing. So I can't stress this enough. I know I'm repeating myself a bit, but I really need to nail this point. Guys, the stocks are telling us what they've done. There's no, I wonder if this is a good one. This is the good one. These are the good ones for a specific window, which is 8 weeks, okay? Straightforward. Now, we know we're looking at data. Next thing, how and why does this occur? Like, seriously? Yeah, seriously. There's only one thing that can move markets: big money. Now, with a room full of people, with Sherry and Dan here, I'm going to assume there's no institutional investors, people that are trading hundreds of millions or billions of dollars, meaning it's just us retail traders. So if you or me, all of us together at the same time while the market is open, if we wanted to go in and buy 100 shares of HCA or 1,000 shares, even collectively, we may not even make one block trade on the CNBS ticker. And it's going to go along the bottom of the screen. And then what? Well, the US market's open from 9:30 in the morning till 4 p.m. Eastern. We have the whole rest of the day. And that's my point. If stocks are liquid, you and I can't cause this kind of stuff. Only the big money can. Now you can say, well, I thought big money was smart money. And it's say not all the time. Hedge funds blow up all the time. My business partner worked at a hedge fund briefly. We had to sign a non-disclosure agreement that I can't even tell you the name of the fund, because if I told you the name of the fund or the first or last name of the fund, the head of the fund, you would know who this is. I can't even tell my wife. They know what we're showing you, and there's not a dang thing they can do to stop it because it's not proprietary. We built the software, we're crunching numbers, and we're buying data. Nothing special about that. What makes it special? 2 clicks of a mouse and you get to see it. And you're not an institution. Now you know what they do. And here's the other thing. They don't do it to every stock. Not all stocks have seasonal track records with incredible accuracy from a historical perspective. These do. So not only is it not the whole market, it's a very set list of stocks that do. And that's what we can uncover for you in 2 clicks of a mouse. Okay, so track data, we know we're looking at raw data. We know big money causes it. Now there's something else neat that happens, that when the big money decides to come in, they sort of create like an ebb and a flow in the ocean, or like a wave, if you will, a wave in the ocean. When they decide to buy, because they're trading such huge size, okay? And again, you might say, but they're going to buy the same stock at the same time every year. They're going to sell the same stock at the same time every year. It may sound hard to believe if you've never seen me in a presentation, but the facts don't lie. There's no opinion here. This is what's been happening. They have to buy over days, maybe even weeks, to slowly get their positions built, because if they come in and they plop down all their money at one time, it's going to register, it's going to set off alarm bells. You've heard of the Nigerians probably. They have unusual options activity. If too many options go in, everybody knows their software is built to track that. Well, the same thing if big blocks of shares come in. Your broker may flash stuff on your screen, and guess what? The people in the know will see the volume spiking too. They don't want everybody to know that easy. That becomes the layering of the position. Well, once they're in, it creates a push, because they just can't get out and say, oh, what's today, the 7th? We're going to go buy some stock today of these guys, and we're going to go flip it on Thursday afternoon. Okay, the big money's the market. They just can't buy the shares today and then say tomorrow they want to sell. Now they can, but they're going to take a hit, because if they hit that sell button at the same time, the shares are going to plummet. People are going to see what they're doing. There's going to be a piggyback, and all of a sudden that's how you get these big moves. They don't want that. They want this ebb and flow, which is proven by the data you see. So they ride it, and it keeps going and it keeps going. Then they decide to get out. Same thing. They're going to have to sell over days and weeks, and all of a sudden the stock starts going sideways or down. I've been following the market since 2000. Started trading right after that. I've done so many things wrong. I got a closet full of t-shirts that say, don't do this, right? We've all sort of been there. And how many times have you bought that stock and you said, wait, the trend was good. Everything was good. The volume, everything looked great. But when you bought it, the stock went sideways. Or when you bought it, worse, the stock ends up going lower. Been there, done that, right? Got the t-shirt. What I'm going to show you here in just a couple more minutes is a proverbial treasure map that proves if you bought this stock at the wrong time, you were the sucker at the poker table. So you're going to know when they come in, check, and when they leave, check. Well, holy moly, that's a pretty bold statement until you see what I'm about to show you. And then it's just going to blow your mind and say, oh my God. And that's when I do these open houses. And I get told all the time, Ron, why are you giving away all these free trading ideas? Because I'm going to free trade idea you into submission. You're going to say, I will never trade without this information again. You must know when they push and when they don't. All right, so we're looking at data. It's big money and this ebb and flow. We got it. Now, how do we know that this year is going to be the year they're going to work? That's what we all want to know. Well, guess what? We don't. Past performance cannot guarantee future performance. We did do one thing though. We added a component. And this component is called stock score in red. Now I see the counter keeps rising here as more people are coming in. So what's circled in blue is data, fact. The red is an algorithm that we wrote. So my business partner and I both have 20 years plus in the markets. He worked at the hedge fund. We put it all together. We literally wrote an algorithm to try to pick apart the stock, to almost deny the stock. to uncover and look under the hood and say, y'all might have great track records, but you know what? Something's wrong under the hood. And maybe this is another year they're not going to live up to their track record. Does that make sense? We're trying to find the worm in the apple. We can instantly show you if the stock is rated a buy or a sell. We don't care about the number. In fact, ignore the number. I don't care if it's 55 or 95, irrelevant. Is it a buy or is it a sell? I have the settings set to show just buys. So guess what? These are the hottest stocks for the next 8 weeks. I'm not even taking you into year end. I'm presenting you with these turkeys to kick the new year off with a bang as a twofer. These are the great stocks. This is what I do year round. Whenever I do an open house, it's the same presentation. Only difference? Stock list changes depending what month I'm in. So that's stock score, fundamental, technical, sentiment, and seasonality all rolled up into one. And we're going to see if we can find something wrong. So let me go in here. Let me erase all these drawings. And I'll scroll down. You see how it says stock score rating? I had it set to buy because I have to sort of shorten this presentation up a little bit. If I take it to both, look what happens. Wait a minute. PayPal is actually a strong seasonal stock this time of year? Yeah, and based off accuracy for the next 8 weeks, this little turkey is ranked number 4. Here's the problem. We have it rated as sell. What does that mean? There's something wrong under the hood, whether it's the chart, whether it's the fundamentals, whether it's the sentiment around the stock. It is overriding the seasonality portion of the equation. This is called culling the herd, and this is what we do for you. So when you come in, I have these little how-to videos. I'm going to tell you, listen, come in, pick your settings, come right down here, and if you want to look for bullish stocks, put it on a buy. Now you're done. Now you're only looking at the best. And if you're someone that says, well, I think the market might be rolling over here, and I'd like to do bearish stocks. Okay, there's one thing I would love to offer you for free. Stop listening to all the talking heads on TV. Everybody's got an agenda. Please ignore it all. Just go with what the stocks are doing. Some are going to go up, some are going to go down. If the whole market's falling apart, we do bearish stocks. If the market is in a bullish posture, we do bullish stocks. We are trend agnostic. We don't care. The one thing that we all like, money. We just want to know what the big money is doing, and that's what we want to follow. Because how have you been doing? And the answer is probably not as good as you want to be doing. So let's stop doing that and let's go do what they do. And you might say, well, how do we know what they do? You're looking at it. This is who they traditionally push. This week forward, 8 weeks. It's just my gift to you for being here. All right, so we have this set to buys. Now, before I go any further, I want to do the sells. If you said to me, Ron, I want to look for stocks that trend lower this time of year. Okay, you can pick your settings. I have a video that shows you right there on how to do the bearish settings. I already have them saved. So I can just come in here with one click of a mouse, grab the bearish settings and say, hey, do you own any of these stocks? Because if you do, this is the naughty list. We looked at the good list. This is the naughty list. If you own these stocks, these things drop this time of year. Boy, wouldn't you like to know that? Imagine plugging in your portfolio, which you can to Financhill. We have a watch list feature in the upper right here. In fact, I'll show you. The moment you're in, you upload your watch lists. You put them in here. We're going to show you what your track record is on your stocks right away because we have the data. So it's super easy for us to do. You import, you're done. It's like, oh, guess what? Boot Barn, not a good stock this time of year. Big Lots, not a good stock this time of year. It's only 57% track record. Who might be better? Well, look through other lists, or just you can also change and say, well, wait a minute. What if I want to go out the next 4 weeks? Big Lots actually drops. Boot Barn drops. Burlington still goes higher. If you want to, excuse me, if you want to stock for the next 3 weeks, based off your own watch list, you can see this. So it's very, very easy. So you can flip back and forth whenever you want. All right, so I showed you bullish, I showed you bearish. What are you and I going to do to actually send you home with trading ideas I like, which is the whole point of this? Let me tell you which ones I like. I have them written down. All we have to do is go back and get our bullish settings. So let's go back in there. Boom. You see how quick the data is loading? There's no delay. We have all this stored on our servers. So it's not like you're doing calculations every time you come in. It's just boom, 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 and you're done. We can sort by historical percent of increase, which is track record. We can come over here and say, well, which ones move the most? And that often grabs people's attention. I picked out 3 for us. Once you pick out which one you want, you can just come over here and click on this chart button. Now, there is something I want to show you. And when you click on that chart button, it's going to take you to seasonality charts. And you're going to see how long a stock is instantly publicly traded, which is 29 years. You then see a solid line chart and you see a dash line chart. The solid line is just representative of what that stock has done for the past 12 months. Just to give you an idea. In the case of the broad market, which is the S&P 500, it's dropped. Duh, we know this, right? And there's been bounces, July 4th weekend, and then here again. Okay, now here's where the magic is. This dotted line, because we have all the data pre-stored on our servers, you can literally take your mouse and go week by week and instantly see your stock's performance. And then you can quickly decide, is this a stock worth owning, long, buying, calls, or stock? Is this a stock I should be selling, consider selling, etc.? Over the next 4 weeks, which takes us right into the new year, the broad market rises historically by 0.61%. The historical accuracy of this stock rising is 62%. Let's keep going. We did an 8-week search. So between now and the end of January, the S&P is projected to rise by 0.71%. Historical accuracy is 58%. Does that sound like it's a massive bullish bias? I'm going to answer that. I'm going to say no. To me, 70% or better is a bias. 80%, yeah. 90%, are you joking? And 100%, where do I go? Sign me up, right? So anything above 70 is really exciting. Below 70, not really. Here's the broad market. It's like 50-50. I mean, you and I can do this. We can play pin the tail on a donkey. Even blind squirrels find nuts, right? This really isn't bias. Now, here's my point. 0.71%, not even 1% in 8 weeks. Would you be happy with that return if history played out? I can speak for myself and say, God, no. I would probably quit trading if that was the goal. Or you can come to Financhill and say, over those same 8 weeks, I can target stuff that is, I don't know, 33 times better. I don't say so. The stocks are telling us what they've done. There's a difference here. There's no opinion. Doesn't matter. I'm just your guide. That's all I am. 19 times better, 14 times better, 13 times better. Here's the next question. Said there was going to be a bunch of hokey questions. Didn't you always want to know the stock? Its track record before you put your hard-earned money into it? Didn't you always want to know which the outperformers were? You hear about the vaunted Santa Claus rally. But then when you look at the broad market, you're like, wait a minute. Even if we were having this webinar a month ago, it was still only a 2% move into the middle of December. Or do you want to trade stuff that's like 15 times better than that? That's the point. Not only do we're getting 2 massive pieces of data here. Not only do we know who moves, we know which ones outperform. Like, are you joking? Like, no, it's just data, guys. We're just giving it to you. So at this point, Mike could say, well, I want to trade Cheniere Energy. Manuel could say, I want to trade Pulte Homes. Maybe he's in the home business. Somebody else could say, I want to trade another energy stock because maybe she works for an energy company. I don't care what you like. I think we all like money. So just pick something that makes it fun for you. For us, you and me today, I got stuff loaded. First one up. So these are trading ideas I like right now, all based off the data. So I'm going to give you my 2 cents if you care. First one, HCA Healthcare, 11 years of data. Someone here might say 11 years, stock market's been around longer than that. I'm like, okay, hold those horses. Yes, it has. We're going to do shorties. We're going to do long ones. It doesn't matter. It's just data. We look out 11 years, we come down here and start moving that mouse and we see 72%. So the top of the box will show you the rise or the fall. The bottom of the box is going to show you the track record. 72, 63, 72, 73. Whoa, wait a minute there. 90%? Okay, between now and January 31st, HCA is projected to rise by 7.12%. It'll even tell you the closing price with a historical accuracy of 90.91%. Now, if a company is publicly traded 11 years, you can basically go 10 divided by 11 and you get your number. This thing has won 10 out of 11 times, 10 out of 11 years over this specific 8-week window. And you made 7.12% with the losers in there. Could you imagine tomorrow morning having breakfast with your trading buddies and you said, you know, hey, Janet, or hey, Bill, yeah, I got this trading idea. It's HCA. I think it can rise by 7.12% over the next 8 weeks, you know, till January 31st. And I feel 90.91% accurate that that can happen. I think their mouth might open and they're going to say, so what you got in your coffee there? Is that an Irish coffee, or, you know, what are you drinking? You're like, no, it's just the data. That's all you're doing is using the data. This is how we find these trading ideas. Now, you guys are new together. This is my first time here with Sherry and Dan, but I've been doing these since 2016. History's been around. Stock market history started 50 years ago. This has existed for longer than I'm alive. So yes, it's work. From that standpoint, you can say it has been around, therefore it has been working. Is it perfect? No, but you aren't guessing. 90% in 11 years. I can show you stocks that are 40 plus years traded and they got 80, 90% track records. That makes your head spin, because you start going back 40 years. Now you start thinking about, wait a minute, different presidents. We had wars. We had tragedies. We've had debt ceilings. We've had banking implosions, real estate implosions, right? You had all this stuff. And yet we know who they push and when they push it. But what about fundamentals? But we're not talking about these stocks going to the moon forever. These are just windows of time when they get the money. Then the money leaves and they go somewhere else. You might say, so wait, so they push them for a period of time, then they walk away? Yeah, the charts don't lie. Take a look at this. I'm going to get my highlighter out again. This is literally the point at which you could drag one of your kids in if they're getting home from school. I just see our neighbors walking up to the bus stop. So again, their kids, it's like, hey, give me one of your kids. Look at the line. Drag one of your kids in right now. And they would say, hey, mom or dad, it looks like now's a good time for this stock historically. That's correct. And then guess what happens? Then the stock goes through a period of where it does diddly. It goes nowhere, right? And then it goes right back into a period where it's another win, right? Why are you holding stocks for an entire year if there's only one pocket or two pockets when the stock has actually gone up? I'm not saying to trust me on this. The stock is telling you what it's done. There's a difference. The facts show when it has been pushed. All of a sudden you start thinking about being very surgical with your capital. To my point, why are we holding stocks for a whole year if they only move in certain periods? We're not marrying our stocks. We just want money. We trade on bullish here. Now, you could be a credit spread trader or someone who wants to do covered calls, and then you might say, oh, well, if I don't really want to get rid of my stock, then maybe in the center there, I'll just do covered calls. I'll do iron condors. I'll just do credit spreads. Hey, more power to you. But I didn't have time to ask a poll at the beginning. When I do my own open houses, I'll ask, hey, who's a stock trader? Who's an options trader, calls and puts? And then who is a credit spread trader, someone who's much more advanced in the options market? So you have three choices. Usually it's about a third of the people do stocks, over half do calls and puts, and everybody else does credit spreads. I just covered you all. Stocks, calls, credit spreads. Now you almost sit back in your chair and say, whoa. Yeah, and it's data driven. I'm not asking you to trust me or some kind of secret sauce. There's no secret sauce on this. It's just data. And that's what's so fun about it. So empowering. Okay. Let me erase these drawings and move our mouse. Now you can go week by week. And what is crazy about this is, you know right down to the week which is the best one, which appears to be January 31st. But you could say that, well, that little line, it goes up further and further. It does. But we only get up into the 80s. So guess what? You can now be laser focused and say, yeah, I could hold it till March. But why would I do that when I get the best odds right there? Bingo. Now, if we go to a chart of HCA, I'm talking too much here. I got to go faster. What do we see? Oh, so the stock market's been down 4 days in a row. People are talking about the next sell-off, and maybe it's going to happen. This is a daily chart using Thinkorswim of our stock, HCA. Let's go ahead and zoom in. Here we are today, 12/7, live in the market. Here we were a couple days ago. Here we were over here. The stock is trending up. It's not following the market down. One more time. Wouldn't you love to know which stocks buck the trend of the overall market? Guess what? This is one of them. My gift to you just for being here. Okay, so that's HCA. Let's go look at another one. We're gonna go faster now. We're not taking this much time for all of them, even though I find this fun. This is Zimmer Biomet, different company, right? Again, drag your kid in here. When do you think the best time of the whole year would be to own this stock? Looks like it's pretty obvious, right? The 45-degree angle line, duh, right? It's like, of course. All right, let's go week by week then. 21 years of data, so almost twice as long as HCA. 66, 80%. That's 8 out of 10 years for 2 decades. 76, 80, 71, 71, 85. Over 8 out of 10 years for 2 decades in a row. That's the average. This thing goes up 7.9% in 8 weeks, right before Valentine's Day. Better than a sharp stick in the eye, huh? Incredible degree of accuracy. What if we go further? 80.95, and we get another 85.71 right through February 21st. If it was bought today and held, 9.44%, 85% of the time. Would I consider holding this stock the rest of the year? The answer is no. It doesn't really move much. I'm not being arrogant. I'm not being cocky or smarter than I am, if you will. I'm just simply reading the data. And it shows that there is no net movement when you combine all 21 years. Now, you may go back last year and say it went up or it went down. You can't look at just last year. We're doing that work for you, that heavy lifting. You take all 21, you average them all together, and you say, whoa. So for a trading strategy standpoint, and you said, so what's your track record? The stock's telling you its track record. Right through February 21st, it's an 85% of the time winner. Losers included, you're up 9%. Pretty cool. Now, not only can we do that, I don't want to get sued by Amazon, so it's one word, Financial Alexa. Hey, Financial Alexa, can you show me the best time of the entire year to own my stock? It's like, what does that even mean? The biggest percent move, the raw move. What we've looked at here is accuracy, 9.44%, 85% of the time. We now want to see when the stock has its biggest raw dollar movement. Click best period will instantly throw, and it starts with a 13-week average. You can move that average to whatever you want. And if you take it over 11 weeks, it's peak to trough. ZBH has risen 9.44% with a track record of 85%. What does this tell us? You can visually see it, but I want to emphasize this. Sometimes stocks will have 2 or 3 points throughout the year where they surge. This one only has 1, and guess what? It also matches. When you have these 2 things coming together, the raw move and the green line, which is the raw move, and the track record, this is like a grade A type of situation. This is what we did with so many other stocks back at the beginning of the month. I pounded the table like crazy. I did so many open houses at the end of October when folks still thought the market was going to crash. I'm like, listen, there is one time of the year you cannot miss, and there is a second time of the year you cannot miss. If you miss these windows, you will likely underperform. And it's not just me saying that. Buffett has said it. He's gone on record. He said, if you miss when the S&P is up huge, you will end up underperforming the year. It's real. The best times of the stock market are the end of October, beginning in November, into December, and then it reignites in January. There's another one coming up. You cannot miss these windows. History has shown this is the chance to outperform. You've just been given another stock that outperforms, and it has its biggest move for the whole year. You with me? Now, if we go with stock chart really quick here. Here's ZBH. What do we see? Stock's starting to run. Look at all this chop, 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 right? And we zoom in, and all of a sudden, it just goes from 110. It's already up 10% in the last month. Well, guess what? If you had access to Financial, you would have known this. You would have known that this stock is entering its window. Look, we're live. Look at what the markets are doing. They're red. YM is Dow, NQ is NASDAQ, ES is S&P. They're all red. What's your stock doing? Oh, you're up 2.17%. Talk about outperforming on a down day. That's my point. We know who they push. Now you do too. So no, it's no shock this thing is going higher. And if you want to target, even though what it was like 7-8%, is probably headed back up here. That's the next major resistance point, somewhere up in there. This one I like too. Let's go do another one. Okay, oh, I want to do this one. All right, home builders. It was hilarious because I was doing an event last Black Friday a year ago. It was the worst Black Friday in the history of the stock market. It was a multi-speaker event, and I came on the last speaker. I'm like speaker number 6. Market got killed. Everybody's bearish. I'm like, listen, maybe we're going to sell off, maybe we're not. All I can tell you is this. I'm going to hand you 3 or 4 stocks. They're all bullish for the next couple weeks, and then you guys just let me know how it plays out. In fact, the organizer said, are you sure you still want to go on? Do you want to change your presentation? I'm like, no, it's data. We're not changing squat. We're just running with it. It was the home builders. Go look at Black Friday a year ago and look out 2 weeks, and you see the home builders just exploded in the face of the market, not knowing what to do, and it was trying to trend lower. Same thing here. The home builders do really well, but not all the home builders. You can't say all oil goes up at this time. Some outperform, some underperform. The key to Financhill is not only do we know which perform, we know which ones perform better. So watch this. So here's Toll Brothers, 36 years of data. Okay, so we're getting even more data now. We scroll down. You can quickly see that for most of the year, Toll Brothers, just look at the dashed line. It's just sideways, right? So you're not making any money from a directional standpoint. When does the stock have its biggest move? Now. Look at the line. It's the biggest spike. Look at these weeks. 55, 67, 75, 66. If I go out 8 weeks, it's 66, 61, 58. Did you hear me say any 80s or 90s percents? No. Okay, watch this. Now we're going to take it and compare it to Lange. 28 years of data. Same thing. This home builder also goes lower left, upper right. But look at the data. 75, 71, 78, 82. This is far better than Toll Brothers. So we don't just go buy the home builders. We're going to consider buying the one that moves the most because that's what it has done. Not that you think or I think it's great. The suckers performed. This is the MVP list. You now know who they are. And see how it starts dipping into the 60s? You now know, based on 28 years of data, if you were going to consider the home builders, Lange hands down beats Toll Brothers, 9.78% in 9 weeks. And if you want the best period, we can push this over. I'll even set it to 9 weeks. It's also the best 9-week window. Not over here, because you can see this line over here does start going higher. This is also the same window when it has its best percent move for the year. So we have ZBH and Lange both being rock stars this time of year. If I take you to a stock chart and I type in, who was the first one? Toll Brothers. Toll Brothers is starting to perk up, right? Now let's look at Lange. It's starting to perk up. You would say, well, now which one would I consider picking? You would look at these charts and say, wait a minute, they sort of look the same. I didn't see much difference. Toll Brothers, Lange, they look the same, except you're armed with information, not opinion, not fact, not some kind of secret sauce software. You know who does better, and it's Lange. So if you said to me, and let's say we're in a coaching class together or something, or we're sitting there having a coffee or a beer, hey Ron, which one are you gonna pick? I'm like, well, I'm not picking anything. The data is picking the stock, and the data says we're gonna do Lange because it simply performs better. I don't have to check fundamentals. I don't have to check squat. I don't have the millions of dollars that I can do research on a single stock. The big money does, and the big money is spoken, and they push Lange clearly at a higher rate than Toll Brothers. It eliminates all guesswork. You know who they do it to and who they do it to more, right? So that's Lange. Now, I want to show you, so you have 3 trading ideas, HCA, ZBH, and Lange, ready to go right now. Follow them. When I was doing webinars, beginning of this month, beginning of November, and the end of October, I was shouting from the rooftops with these stocks as well. One was Big Lots, one was Burlington. Look at Big Lots, 21 years of data. Now, retailer, right? You might be thinking, you keep reading about how the retailer is going to get hurt. Maybe they will get hurt over time. But that's an opinion. Forget that. You want the data. Look at October. I can forecast out to next year and show you that for 21 years, this dotted line slowly drifts lower into December. And in fact, if I take you out even to the end of this year, you would think maybe the discount retailer might hold up the best. Actually, for 2 decades, it falls by 2%. It only rises 38% of the time. 62% of the time, it's dropping. Or would you want to trade a stock that actually rips into year end, a stock like Burlington? Look out here in October and November. Do you see how I can tell you right now? Here's my other gift to you. Going out to October and November of next year, this is when Burlington starts to run. And look how that line goes up. And the line continues to go up. We still have 66% left in the tank. Now, is this a good trading idea for today? No, it's only a 66% track record now between basically today and New Year's. But when I was doing webinars last month and this line began to start to rise, I started telling you guys, this stock actually has a 100% track record. If you go from in here through here, it's never lost. 0 losses in its 9 years. This is the one you watch. So when did it stop? When did it bottom? At the end of October, and then it started ripping? Go look at Burlington. While they keep saying retail stocks are going to get killed. Well, if you look at Burlington a year ago, it did get killed, right? And then I said, no, just give me a couple weeks. Here's November. What'd the stock do? 132. Today it's at 198. 132 to 198. This blows your mind. Both discount retailers, Big Lots, Burlington, maybe they do things slightly different, but this one goes up 40% stock movement. I gave you this one at the early part of November if you saw me in open house, just like I'm giving you these ones now. I am not a good stock picker in the sense that I have this secret something that I don't tell anybody about and I communicate with the aliens. It ain't that. It's just the data. The data tells you who to watch. You grab your popcorn, you sit back and you shake your head and say, oh my God, there they go again. How can this guy keep doing it? It's not about me doing it. You do what I do. You just go to the list and you grab the stocks. Now, the ones that I gave you today are good from today forward, HCA, ZBH, and Lennar. Look what happened to this thing. I'm going to take you to November 5th because that was actually a Saturday when I was doing an event. So the first day was 11/7 that you could trade it. Guys, I'm going to go from 11/7 to today. This is literally a 1-month trade. And the stock was sitting over here, and folks are probably thinking, man, Ron must be smoking something again. He's putting out retailers. And then I have to say, it has nothing to do with me. It's all about the track record. Are you ready? This is why I'm using Thinkorswim. I can come in here to analyze, to prove to you what an option value could be. I'm going to take you back to the 7th, just for giggles. We'll use a January option, just for fun. A 135 long call, the stock was at 135, essentially. It's going to cost $14.20. We're not splitting bid-ask spreads. This is just quick math, so I got to get out of here. $14.20. Do you want to see what that option price is today? It's not even on the screen. I got to get more strike prices. That's hilarious. It's worth $63.40. Now, I don't know. I can see the chat box and the Q&A box if someone was following this when I did the open house at the end of October. I do it every year. I scream from the rooftops and I tell you to get ready. You're not going to believe what's going to happen if you've never experienced this. These stocks can make your year and then some, cover your holiday presents and then some. $14.20, $1,420 became $6,340. You literally made about $5,000 a contract on a $1,400 investment. It has nothing to do with me being a good stock picker. We just use the data at Financial. Let's do another one. Another stock that I told you about was Agilent Technologies, where these stocks are all over the place. 23 years of data. Look at when this stock starts ripping, the end of October. Look how that line goes vertical. Look how this line still goes vertical. It still has a somewhat good track record. It's not as high as it was. Its best track record is over here. You want to see what Agilent did? Where was that low? The end of October. Watch what happens when I type in A. Where's the end of October? right there. What's happened since the end of October? 136 to 153. Better than a sharp stick in the eye. Funny how that works. And the stock mysteriously starts blowing up higher. Did the S&P go up 15%, 10%? Nope. Did the Burlington went up 40, Agilent went up 10. You're talking about massive outperformance, knowing who these stocks are. Okay, then there was this stock, AbbVie. You may say, well, it's only 9 years. I'm going to say, do you not like money? I want you to like money because I like money. Look at the whole year on this stock. It's like, oh, it goes sideways, a little bit of a pop, and then it's dead weight. I don't care if these guys make the best ice cream or something in the world. I don't really care what they do. But there is one window when I want to pay attention. That's the end of October when this line goes vertical. Not only did this stock go vertical, it has a 100% track record in that precise window. So here's one for next year too, just for being here. This is when it's a rock star. Not over here, just here. Okay, we're not marrying stocks. Watch what happens. ABBV. You type, oops, sticky fingers. Where's the end of October? Right here. By the way, look what the stock did last year. Last year, where was October? Oh, it's off the screen, but even from December, look what it did. The stock was up like 50, 60%. Here, where is the day? Let me zoom in. There is 11/4, that's a Friday. We got together on 11/5. The stock was here. And someone said, well, they just had earnings, which is that red phone, and the stock gapped down. And somebody said, well, maybe Ron, it was someone, I understand. Sometimes you just doubt things. But somebody said to me, Ron, let's zoom back out. In fact, I'm going to do a 2-year chart just so you can see this. Because you have to see this. So this is last year over on my left side, the end of October, there was November, and the stock went from 115 up to 175. Crazy good, right? So what? That was then. What about now? So here we are at the end of October, and the stock went from 153, there's the red phone, and it went all the way down to 143. The stock dropped $10. Jim Cramer famously said in a CNBC broadcast, I call it CNBS anymore, it used to be CNBC, he was on air and he had a moment of incredible honesty. He didn't do this. He said he was aware other people did it. And Cramer said on air, which blew my mind to hear him actually say this in front of other people, that when he was at his hedge fund that he ran, he was aware other hedge funds, other big money funds would call up news reporters and fill their ear with baloney, make up stories to drive the stock down so the big money could come in and scoop it up and do a reversal. He basically just called out Wall Street for scam artists, right? I mean, if you and I did that, we'd go to jail, but you know how Wall Street works, they never go to jail. But my point is they drove the stock down to pick it up so they could camouflage their money, their buying. Well, if I zoom in, what happened? Stock drops on earnings. We're always told earnings matters. And you're like, oh man, I'm going to get rid of that stock. And then you come to Financhill and you type in your ticker symbol ABBV and you say, now wait a darn minute. This thing has a 100% track record and it's never lost in its history. Yeah, that's what we did. And I said, okay. So we were together right here on the 5th. The 4th is Friday. The very next day I said, track a long call, humor me. Forget about the fact the stock dropped on earnings. It's never lost. From 11.7, the stock actually finished up multiple dollars. So we're not even going to use the best price. From 11.7 to today, do you want your mind blown? Watch this. We're going to go 11.7, which was that Monday. We use a January call. The stock was at what, 148? So we'll use a 150 long call. Now, I can't speak for you, but if I had a $5,000 account, I could afford this. It's $595. So you pay $595 times 100, $595, $600. What is it worth today? Are you sitting down? I'm going to hit the go to today button. $1,650. You made $1,000. You made $1,000 on $595. This is real money. This matters. And it has nothing to do with me or you picking stocks. It has everything to do with just going to Financhill, seeing who they are and say, wow, now we know who they push. And if you're wondering, does this stuff work on bearish stocks? If that's you, last one, SCCO. 26 years of data. Do you see that peak right there? Don't worry about the numbers. Just look at the peak. You see how it's April 18th? Now, we know what happened this year. I'm not getting into the politics. That's not what we do. We just do money. Russia invaded Ukraine. There's a war. Gold stocks, everything was soaring, right? Fundamental event. You would think, and the war is still going on today, you would think gold stocks would still be doing well, especially with the Fed raising rates, et cetera, the economy crashing, whatever you want to call it. And I'm going to come to you, and I did this in April, and I said to the viewers, get ready for gold and everything to start trending lower. They're like, Ron, you're crazy. I'm like, I'm using data. Unless there's going to be some other event out there that's going to occur, April 18th, Southern Copper and the other gold stocks are going to start dropping. Are you sitting down? What's that day? Look at the bottom of my screen. It's April 20th. Are you blanking kidding me? The stock just broke, and that orange line, by the way, is the 50-day moving average. That's a major institutional moving average. Look how the stock broke that, and then it went from 72 to 54 to 65 to the 40s. How incredibly valuable would it be to know that you have a stock that seems to be moving higher like it should on fundamentals, and you were about to enter a window of time when the big money was going to pull that rug out from underneath you and steal your money, even when you have every reason in the world to believe that things should go higher, because fundamentals are supposed to matter. The fundamentals only matter if the big money's willing to push. And look what happened. The stock goes from 72 to here. Do you want to see what a long put would have been worth? Go from watch this, go from 420 to 516. So we can use think back to prove this. And we use the chart already, 420, so January, March, April. 420, and all we're going to do is, let's say, go out here to June, and we're going to buy a long put for a lousy $3.90. So a June 70 costs $3.90. Where did it stop going down? May 16th. All we're going to do is change that calendar to prove this. So it's just over a month trade, and that 70 long put turns out to be worth $15.70. OMG. $390 is worth $1,500. Like, are you joking? And by the way, isn't that exactly where the peak was? And look how it went down into May. Look at that drop. You're literally looking around the corner now saying, what do y'all have in, what do y'all have in store for me? You're gonna like walk out into the clearing and say, is someone about to just steal my money? It's like, I can't promise you anything, but what I can tell you is I can display the track records, and I can show you based off of proof when they're running with you and when they're about to take it. No more flying blind. So here's what I'm going to do. I went over on time, and I am so sorry. I'm going to go super fast. I get testimonials all the time. Jan actually recommends it to her friends. And my thing is, when's the last time you ever had something you bought recommended to your friend? Monica says, I'm no longer wondering why the stock I picked didn't move. I'm like, yep. This was a recent one from Bobby. Goes, seasonality to stock finding is like having a metal detector on the beach. You need to know where to look. You need to know who they are. So this was my Black Friday deal. Because I was never with you, Sherry and Dan said, is there anything you can do for my people? If you're coming in for your first time, can you do something special? You're going to get my Black Friday deal with all those bonuses. This deal doesn't even exist anymore. Are you ready? I don't know what you thought the price might be. There is one catch. We hit 50 packages. The page will lock. That is the only catch, if you will. So it's not 1,800. It's not 1,000. It's not 797. It's not 497. When we sell our final 50th, it will close. The order page will actually go gray. It's 397. The link's at the bottom of your screen. I'm going to leave it up, and I'm going to answer any questions you guys may have. So if you got them, fire away. You just go to financial.com/bestever and you get this. Here's one key important note. Often folks will go visit our website to see what we're doing. This same price exists on my website. And you might say, well, why is it special then? Because if you go to the website, it's $397 for 3 months, only 1/4 of the year. What you are seeing today is the Black Friday best ever deal. It's actually the price from 2016. So we're going back 6 years. Just last month, it was higher. So you can thank Sherry and Dan. They're the ones that ask me, hey, can you do anything? I'm like, yes, I will give you this. I call it the mother of all holiday specials. So it's $397 a year. You get to keep this price every year you renew. It's not like you're in now and then it's going to change on you next year. It's what we call Platinum Access, which is what you saw today. You're going to get one more time the Black Friday deal 2 weeks later. Or is it a week later? My goodness, I lost track of time. Yeah, it's almost 2 weeks later. I have a list of hot stocks because I helped build the software. I know which stocks do the best in certain months. I created a PDF and I uploaded it to the website. When you join, you can go in there and download it and keep it. It's yours. You will get invites into member-only sessions. What does that mean? Once or twice a month, I host a live session, or like today, except we're supercharged. I'm not explaining stuff, we're just doing. I will show you exactly which stocks I want you to watch. Not because I think they could be good, the data says they're good. Now I'm giving you my favorites. I will show you where to get in and I will show you where to get out. To be clear, there are no alerts. This is not a trading service because you don't need it to be. You will be on autopilot. No joke. There's no value if you have to, this is my opinion. There's no value if you have to be dependent upon me. I love what I do. It's a lot of fun. You probably heard it in my voice. But if I get run over by a reindeer, then there's no more value. You just, as long as the software bill is paid, you're good. So I'll show you where to get in, where to get out. It's all end of day. I will do some day trading on my own. That's not this. This is you live your life. You come home and you say, where's the stock? Am I going to get in or get out? It's that straightforward. In fact, it's so easy that if you were following at the beginning of the presentation, when we said HCA had a 90% track record, you're literally buying it today and holding it for, I think it was 8 weeks. You could take a long nap. Maybe you want to go with Elon Musk to Mars for 9 weeks and then come back, whatever it might be. So you get your weekends back. You get your time back. There's no alerts coming out because there's nothing to tell you. It's just the track record. You follow it along. Now, the third bullet point, me personally, I got to use a trailing stop. And just to rehash, let me just type in HCA. Hey, Stanley, yes, you can do ETFs. Oh, by the way, US and Canada, we have Canadian data. If you want Canadian data, activate the Canadian flag. If you don't want Canadian data, deactivate the Canadian flag. There's no extra charge for Canadian data. So when you're in here and we talked about HCA and we saw it had a 90% track record, here's my point. Life does not get any simpler. You're buying today and you're holding till January 31st. Let me know how you did. This is the exact thing we did with Burlington, Agilent, AbbVie, SCCO. It doesn't, the stocks just change. It's the same thing. You could just buy and hold. Now, me being a trader, a swing trader, I got to have a trailing stop. I just can't buy something for 8-9 weeks. It's just not in me. I want to hold it that long, and maybe I will hold it that long. But if there's ending up going to be weakness in that stock, then I'll use what's called a 20-day EMA as a trailing stop. Well, that may sound complicated, but I have a video and a PDF that explains it. So once we're in and the stock gets below the red line, you come home from work, you have dinner with your family, put the kids to bed, whatever it is, you flip your phone open or your laptop or your iPad and say, wow, my stock was up today. Well, guess what? There's nothing to do. Oh, your stock was down today? Is it below the red line? Nope. You're done. Go back to enjoying your life. Below the red, the trade is dead. Otherwise, you're on autopilot. So it's not my job to try to complicate your day and take time away from your day. This is brain dead simple. It's super easy. So Reagan's telling me some of you guys are jumping. We're at 50, 42, and now at 37. If you got questions, please do fire. All right, what else? You get these bonuses as well. We talked about the seasonality search and screener. Those first 2 bullet points is what we let out with. The next 2 bullet points, stock score. You can actually type your stock into stock score and see if it's rated a buy or a sell. And we will send you email alerts using stock score when they go on buy or sells, which takes me right into watch lists. Hey guys, remember how I told you that when you join, I want you to put these, immediately go to wherever your brokerage is. If it's a Fidelity, Schwab, TradeStation, Interactive Brokers, Tastyworks, wherever it is, download your watch list, upload it into Financhill. You're now a member. You can have unlimited number of watch lists. You can have unlimited number of stocks in your watch list. You can have it all, okay? And then move that slider like we did earlier, and you can see which stocks have bad track records. Guess what? Big Lots and Boot are not good for the next 4 weeks. Burlington still is. And had you known about it last month when I gave it away for free in a webinar just like this, you'd be sitting there shaking your head saying, I cannot believe I bought a retailer when they're talking about super high inflation, no extra money, retailers having too much product at a high price, and the holidays are supposed to be crap. And then I go and tell you, oh God, stop listening to all these talking heads. Please just go watch Burlington. The thing entered a window where it never lost. And then you say, that dude was right. The stock just went up 40%. Notice we didn't talk about Macy's or Dick's. We didn't do Big Lots. We didn't do all those other places. We did one, and it was Burlington. That's the difference. We knew which retailer to target. No more guessing. So you get access to watch lists. We also have, and Reagan said we're now at halfway. So she'll be able to say good welcome to all you guys. There's 4 other things that you still get. This is no longer going to be part of the package. So you can thank Dan and thank Sherry for these as well. We have a covered call screener. That's going to be $100. You get it free, by the way, as part of your $33.08, but it's $1,100. That's $99 a month. You're getting free. Value investor stocks. That's $50 a month, free. Buffett style fundamentals from my business partner's time at the hedge fund. Newsletters. We actually auto publish seasonality trading ideas and covered call trading ideas to our website, and we email you once a week so you guys know that they're sitting there, but these are auto published every day. So if you want to be sent trading ideas, these newsletters are thrown in as well. $100 each. You don't pay a dime. It's $397 for the whole year, and you get to keep the grandfather price at $397. So I know I was listening and talking about the price of food these days. It's even less than going out for dinner for 2 people now. This should instantly pay for itself. That's the point. Okay, questions, fire away. I kept you longer than I had to. Sherry, if you have to shut us down, feel free. I'll hit some questions.
I'm here. You just go ahead and do your thing.
Okay.
This is a fantastic opportunity for people, and they just really need to see it.
Oh, thank you so much. Thanks, guys. All right, so I saw one of the questions earlier about ETFs. Yes, so we don't do futures and Forex. Those are the 2 things we don't do. However, the ES is the E-mini future, but we have SPX and we have SPY. Let's say you like to trade sugar. The ETF is SGG. If you like to trade coffee, JO. If you want to trade the British pound, FXB. FXE for the euro, UUP for the dollar, FXC for the Canadian dollar. If you want to trade countries, EWZ is Brazil, EWH, you have EWA, things like that. As long as we got the data, you guys have it. So that's all part of the package. There are no data fees, just $397 a year. Okay, Bill, how long does the average trade last for? It really depends, because you might say you want to trade for a month, but then someone else may say 2 months. Someone else may say 3 months. Here is my answer. If I am trading a stock bullish, I'm going to let the thing go as long as it wants to go, because I'm not going to tell it to stop going up. It sounds silly, but it's the truth. If that's going to be a 3-week trade, fine. If it's going to be an 8-week trade, fine. Don't really care. When it gets below the red, the trade is dead. And that's just the red line. Now, if you don't want to use a trailing stop, I would direct you back to this. We would go right back in here. We'll use HC as our example. And if you just want to follow, if you just want to follow track records, you're literally buying today and you're holding it for that track record. Whether it's February 21st or January 31st, it is totally up to you. Does that make sense? Hey, Alfred, you had a question on credit spreads. Okay, because I can't ask the poll here, I had said earlier, usually about 1/3, a quarter to a third of you are just stock traders. Well, you just saw how easy life was, right? Super duper easy. When I do a screen share, sometimes the text gets caught. Let me just hit refresh. Yeah, there we go. So if you're a stock trader, what you see right now, it's that simple. If you're someone who loves to sell time, you're now a options trader, gonna be more advanced. Could you imagine taking this list that you were just presented with and then not doing an 8-week time frame, even though credit spreads work for 8 weeks, but move that puppy into 4 weeks or 5 weeks and take yourself into the middle of January? The list will then change. You are now looking at stocks that have fact-based historical track records throughout their entire publicly traded history of having an upward bias. So let me just draw this because this is really important. Try like an XY axis. You put your bull put down here below the axis. If the stock goes up, you make money. If the stock goes up at a 45-degree angle, you make money. If the stock goes up a little, you make money. Stock goes sideways, you make money. Stock can even drop a little, you make money. The only way you get hurt is if the stock drops a lot. So by definition, a credit spread, you're making money in 4 of 5 trending directions. You only have one direction where you get hosed. So you take stocks that have fact-based biases and then pair that with a multi-directional strategy. What else do you want? You got it all based off of fact. And that's what's so exciting. So whether you do credit spreads or you're just, I'm going to call it a much more simpler or basic trader, and you just want to trade stocks, there's different ways that you can use this information. Directional perspective, non-directional perspective, covered calls. What's one of the biggest gripes people have when they do covered calls? Oh my gosh, whenever I short a covered call, the stock keeps going higher and I miss out on all those gains. I know, been there, done it, happened to me. Okay, let's just, for example, take HCA. Look when the stock peaks, March. Now I can't tell you what to do, but here's some food for thought. If you were told that for the next 2 months or 3 months, the stock had a bullish bias and it was a big move, you wouldn't do a covered call, would you? You're just going to let the stock run and participate in the raw gain if it follows its track record. And then when the stock finally peaks and it goes through a period of sideways, then you do your covered calls. The flip side to that is, if the stock does have a crazy high track record of rising, in this case, you now know that if you're going to go month by month and you say, let's go out 1 month, and the stock has a 1.83% move, guess what your covered call needs to be? Somewhere above 1.83, because that's the average move. Now all of a sudden you start thinking about, oh, so if I am going to do a covered call, I now know ballpark where it needs to be placed so it has a chance to expire worthless so I can keep doing this each month. Does that make sense? It better be higher than that number because that was the average. All right. Hey, Monica, the link is financial.com/best ever. It's one word, no space. All righty. Hey there, Cesar. On the average, how many stocks or options do you buy or sell, including spreads? Caesar, it's going to be totally up to you. There's no way I can answer that for you. Me personally, this is the time of year where I am the most directional. Not that I'm a greedy little piggy. I like to be an opportunistic greedy little piggy. This is when the market moves. That's why I was literally screaming from the rooftops, telling y'all to get ready. I didn't care the market was dropping in October. I actually used the words perfect timing, get ready for a turn. And then October 13th hit and up we go. And it's been running. I just showed you stocks today that we talked about a month ago that were up when the market's been down. And then I gave you HCA, ZBH, and Lange. They're going up while the market's going down. Just think about that. Market is down 4 days in a row and you're still seeing stocks that keep going up. And that's what we've always wanted to know. Which ones buck the trend? I just shared them with you, old ones and new ones. So it's really entirely up to you. You can be just a stock trader. You can do strictly calls and puts from a directional perspective, or you can just do credit spreads or a mix. Totally up to you. All right, guys, I held you too long. Reagan said we are now at 9. I'm going to stop here. So I was aware that Sherry is going to be sending out the replay, which is super nice of her for
Yes.
folks that couldn't be here live. So that'll be in there. You guys have the link as well because this is recorded. So Sherry, I'm just going to say thank you to you and thanks to inviting me in and everybody that came. Thanks for
I
giving me your
really
time. I
appreciate
hope
you
you
being
guys.
with us.
Oh, thanks. Yeah, I hope you guys enjoyed it. So if you have any questions, just let me know. Oh, I'll type my email address in. It's really simple. It is care, C-A-R-E, at our business name, which is financhill.com. Let me just send that to all audience. Boom, in case you have a question. So, hey, happy holidays, Sherry, to you and Dan. Thanks so much for
Same
having me.
to you. I will be in touch, and I would love for you to come back and join us again. That was awesome. I think, are there still questions coming in? Okay, fantastic webinar. Okay, thanks. Don't forget, guys, there's only 9 left. Thank you. I really appreciate it. All right. That, my friends, is all we have for today. I know you just want to stay here and not go anywhere and do anything. For everyone who stayed to the end, I really appreciate it. Hey, do you guys want to do a poll real quick? Let me see if I've got a poll for you. I had 2 or 3 questions. I think I might have blown one out earlier, but where are they? Chat, handout, questions, polls. There's one. Okay, so let's look at this one. What do you think about this? Can you see it? I don't think you can. Can anybody see the poll? Ah, they're coming in. Half and half so far. All right, well, we got 60% who say yes and 60% or 40% who say no, and it's still moving a little bit, 50-50. Only got 18% votes, so people may be moving. So let's close that one. I have one last one for you. My third question, which you didn't get to see the second one. If you know a trader that you follow who has never been with Traders Exclusive, help me out. Send them in. So vote on this. I didn't leave you a place to leave a name, but what I'm going to do is follow up on the polls that everybody answered, and then I'll be getting in touch with you. So thank you so much for coming. Thank you so much for staying around. I think these were some really great presentations. I will do my best to get the replay up and get the email out to you so you can get back in there and look at everything and be able to scrutinize it. All of our speakers are advised to keep their offers open for a few days because we get so many who do view the recordings. Thank you and much appreciation to our presenters for giving their time and making these fantastic offers. And I think, I see it. I see it, Richard. Matt Macoro. Good deal. I will see that stuff and we will get back in touch. And by the way, Merry Christmas, Happy Holidays, whatever you celebrate, please, we wish you the best. And from all of us at Traders Exclusive, we're saying trade well. And we do have a December 21st webinar to close out the year. Thanks so much, guys. Have a great day. Bye-bye.